Hey, good morning, everybody. Good morning. Good to see you guys. I'm a few minutes early, so I'm going to ramble a little bit this morning before we actually get going. Ron, nice to see you. Paul Flowers. Got both of my Pauls in here now. Andy, nice to see you. Um, did you guys with the divergence questions see those pictures that I posted? We will turn them into lessons today, without a doubt. And thank you for asking the questions. Andy, thank you for posting pictures with questions on it and really asking, hey, what the hell does this mean, Mark? How do I use it? That's what the class is all about, is you guys getting your questions answered. So strong work there. What is today? Today's Friday, isn't it? You guys been busy today? Has there been some trades out there for you? I took one, mismanaged it. You know you're accustomed to winning when you're pissed off about making $100 in 8 seconds. What a wonderful problem to have, isn't it? Technically done for the day. Nice one, Ron. I'm ready. I'm ready for the weekend. I'm not gonna lie. Um, I'm excited. Actually, I'm ready when class is over. There's a new movie, Civil War. Have you guys seen the preview for it? It's like Texas and someone else. There's not a new nuance, Andy. It's the same damn rules. Like your excuse me, your divergence questions are just the rules. It's not a nuance. But it goes back to what kind of trade am I taking? What are my rules for entry? And guys, I think that that's the biggest thing that you've got to embrace. Um, you don't. You don't at all, Andy. So check this out. Man, here we go. Here we go. So, Andy, I'm going to take two pictures. I'm going to take a picture of a large chart, and I am going to take a picture of a small chart. I think you're going to like this. That's it. Stop frying the golden goose. All right, Andy, and really anybody, and we're going to talk about this trade. But Andy, I want you to tell me, this is a large chart. This is a 13-2. Do you have odds favorable momentum and a clear path? And guys, this is what we're going to talk about today. We're kind of going a little round the horn this morning as we wait for everything to get going. But what's important is that you see on the large chart. No worries. You hear me now? Okay. Does everybody see on the large chart here? I have strong triggers. And if you don't know what strong triggers are, you will by the end of the first hour. So I have strong triggers. Here's the other thing. I have no termination conditions. So ladies and gentlemen, good morning everybody. Adriana, Grant. What kind of trade am I taking here? If I find an entry for this short trade, is it, and let's do this, I'm going to put a call out to the side here. Is it a high probability trend trade where all indicators agree? Is it a medium probability trend trade where there is a problem, i.e. 50-50? And you know I have no idea what i.e. means, I'm not going to lie. So it's a high probability trend trade, right? We can all agree with that. This is your high probability trend trade setup. So what's imperative to you, ladies and gentlemen, is that you understand this very simple lesson when we talk about it. And we're going to bounce this around. It may be I don't know. I think this is supposed to be for example. In example, maybe. So if the large chart there, oh, that works too. I don't know. We're getting off task here, Andy. Good morning, Paul. If the large chart is high probability, trend trade, rules met, one divergence doesn't scare me. That's not a nuance. Two divergences don't scare me. That's not a nuance. Only 3 keeps me out of the trade. If the large chart is 50-50, the rules change. One divergence can kill it. You have to know what kind of trade you're taking so that you know what your rules are for entry. So once again, Andy, we're taking a high probability trend trade, right? Because I understand what kind of trade I'm taking, I know with no uncertainty that this divergence doesn't mean anything to me. That this divergence isn't enough to kill that momentum and that clear path. Does that make sense? So what happens is as you begin to study these trades that we're going to talk about, as you begin to recognize these patterns that we talk about, as you begin to look for these entries that we're about to talk about, your desire not to lose will begin to work its way into your plan. Your opinions will begin to work their way into your plan. And you'll say things like, everything was perfect, but one divergence stops the high probability trend trade entry. And guys, this is why, and Paul, thank you for this. This is why posting in the room is the most valuable tool that you have in the education process. Because if there is a challenge, maybe with the chart read, if there is a challenge, maybe with the rules, I'm going to see it if you annotate your chart, what you were thinking, what you were reading. And guys, we will correct it together. We will fix it, and we will set you up for success. So, high probability trend trade, divergence doesn't scare me. Medium probability trend trade, one of those 50-50 trades, divergence is a killer. So guys, I'm going to say it one more time. And what's cool is that by the end of the first hour, you're going to have an idea. If you're brand new, you're going to have an idea. If you're a little more experienced, you're going to understand. But you've got to know what you're getting into so that you know what the rules are for entry. Because if you apply medium probability trend trade rules to entry on a high probability trend trade, you're going to miss the best of the best of the best, and you're going to miss it a lot. Does that make sense, everybody? So what we do here every morning is we become chart readers. Guys, and this is what the class does. And I'm just going to ramble today. I'm going to have fun rambling today. But before I start rambling, good morning, Roku. Hey, great trades this morning up in there. We're going to check news, guys, because news can kill things. What makes divergence print, Andy? Is that your question? What makes divergence prints on a 50-50? I want to make sure that we're getting the question correct. So, did you see this one? All divergences, Andy, is a loss of momentum. It means that price went up and down. Momentum, if it does not follow, divergence prints. So the only thing that makes divergence prints, Andy, is a loss of momentum. Does that make sense? So sometimes it might print on a 50-50, sometimes it might not. The only way it's going to happen is if there's a loss of momentum. So you will see this negative number flashing and changing, right? And guys, we've seen it. It goes from 26 to 32 to 189 to 51, and it continually flashes. This means that there's the potential. There's the potential for divergence. But until the market goes up and then down, the calculation is done right around the third bar. So Andy, you'll see that potential, but it's not true until the third bar. So when you see the potential, if your rules say, I can't enter with divergence, well, then you have to wait for the third bar. If you jump in on the second bar, you're not giving it a chance to print. If you jump in on the first bar, you're not giving it a chance to print. So once again, you have to know exactly what kind of trade you're getting into. You have to know what your rules are for entry and what could keep you from entering, and then you've got to abide by it. Does that make sense? And guys, we're going to talk about all this. If you're brand new, I apologize. I'm going a little sideways first thing in the morning. So what we're going to do this morning is we're going to talk about high probability trend trades. We're going to talk about the best of the best, Andy, the one where it takes a total of 3 divergences to kill our good time. And then from that trade, guys, you're going to become chart readers and you're going to begin to recognize more and more opportunities. But you have to have a set of rules for each and every trade that you take. You have to know exactly what it's going to take to get you in. You have to know exactly what it's going to take to keep you from getting in. And then once you're in, you've got to know what kind of trade it was so that you know how to manage it. Guys, this is my job. Is anyone else getting me cutting in and out, or is it just Rob? Does it sound good for most of you guys? Give me a Y if it's clear. Give me an N if I need to reboot. Okay. No worries. Just making sure. Sometimes Discord messes with us on a Friday or a Monday or a Tuesday or a Wednesday. So, guys, before we do anything, let me introduce you to forexfactory.com. This lets me know when the people in charge might make decisions based on news releases. It's Friday. That's what I'm talking about. And now that I don't have a second job, I get a full weekend. It's crazy. I haven't had that in 20 years, it feels like. Today is Friday, April 12th. And at 10 a.m., we have high impact news. We have, all right, come to Texas, Andy. That's why I'm a little groggy this morning. I was up till about 10:30 last night tattooing a client. We have the preliminary University of Michigan consumer sentiment. I have no freaking idea what that means, ladies and gentlemen. I don't know what's going on at the University of Michigan that makes them have a sentiment about anything. But what I do know is that somebody may react to whatever they say. Somebody may push the market one direction, up or down, and the market may move so fast that I can't recognize my patterns. So what I do is I choose to not trade. And if you're with one of those prop firms, guys, they tell you don't trade during the news because it's volatile, it's risky, and if you make 20 grand trading foolishly, they're not going to pay you on it. And it's important that you understand that. So every morning I check news, guys. So at 10 a.m., set a note. We're not gonna be in the market. Oh, I'm not. You can if you want. You'll do it once. And I'm going to wait for it to settle down, and then I'll start trading again. And then everything that I'm going to talk about, guys, every day is going to come from the educational page. I don't keep secrets from you. I don't want to keep secrets from you. I want you guys to bask in the brilliance. I want you guys to be amazed and awestruck at how easy it can be. And I want you to become chart readers. That's my hope for you guys. That's my hope. My hope is that you guys focus on becoming chart readers first, because when you're a chart reader, you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And then here's the bad news for you adrenaline junkies. 90% of your day will be spent reading your indicators. 90% of your day will be spent waiting for advantages. 90% of your day will be spent waiting. Like Andy just said, you will be a professional waiter. When you start to get bored, you'll begin to fabricate rules. When you haven't taken a trade in 30 minutes, you'll create exceptions, right? Paul, I'm so glad that you mentioned exceptions. I'm not sure. Because exceptions to your rules are opinions. And the goal is that your chart reading becomes so solid, half-truths, that you know exactly what it's going to take to get you into the trade, because rules are based on patterns that repeat themselves, patterns that are testable, patterns that provide a statistical advantage. And as soon as you begin to deviate from those patterns, you begin to deviate from success more often than not. So we're going to focus on staying patient. We're going to focus on becoming chart readers. And then from our chart reading, ladies and gentlemen, we're going to focus on trade entry precision. You're going to be able to pinpoint where the market is likely to continue so amazingly accurate that you're going to take the best of the best trades in the beginning. You're going to become a chart reader. You're going to recognize advantages. And these amazing entries that you're going to learn in this first hour are going to set you up for easier management. Because the higher probability of the trade is, the less you have to think in the management side of things. So we're going to do this today. We're going to focus a lot on rules and patterns. This is what I need from you. And by the way, Mr. Flowers, awesome job posting in the room. Get in that habit, guys. Get in the habit of posting. If you're brand new and you're a little nervous, post in the room. If you're not sure what you're posting has any merit, post it in the room. If you think it's a silly question, post in the room. The people that post the most get to where they want to be the fastest. The people that hide things from me, the people that don't show me losers, the people that have questions but don't ask them, guys, you're going to stew in your own little world of wondering what the hell's going on longer than you need to. So post your trades in class, guys. Everything you see, every question that you have. It doesn't even have to be a trade. And that's kind of the cool thing about this room is check this out. Andy was wondering about divergence. And he said, hey, Mark, let me give you a tiny little hard to read picture with my question on it. Let me show you exactly what I'm saying, exactly what I'm wondering. And let's get some answers for me, Mark. And that's exactly what we did. And what we're going to do today, I will cover divergence a little further. Can you guys hear me? Or is it just Rob? Guys, if you ever can't hear me, make sure that you tell me in the room. And what I'll do is I'll tell you to reboot. And I'll do it again because he may have gotten caught up in it. And if you see a bunch of people start putting Y's, yes, clears, 5x5s in there, then you know that it's just you. And go ahead and reboot and come back in. So guys, posting in the room is probably one of the most valuable things that you can do. But don't just post, hey, Mark, look what a badass I am. I want to trade. You got to tell me what you saw. You've got to tell me what your chart read was, because remember, the whole focus of this class is to turn you into a chart reader. Because when you're a chart reader, you have a better shot at becoming a successful day trader. So share the advantages that get you in. Make sure that I can see where you take that entry. Make sure that I can see where you take that exit. I can tell you right now that management is more difficult than entries. Your entries are going to become easy. Management takes a little more into it. So if you tell me everything, this is what I saw, this is why I did what I did, this is where I did what I did, hey, Mark, can I do it better? And we'll have a very honest conversation with each and every picture. It's like having a private session with me, making sure that you're reading your charts correctly, making sure that you're giving yourself the least amount of risk with the highest amount of profit potential, and making sure that you're not allowing your opinions or your hope or your wishes or your wants to keep you into trades longer than it really makes sense to stay in. Guys, the market doesn't care what you want. It's important that you understand that. But rules which can be proven, tested, back tested, and without a doubt win more than they lose, guys, that's where consistency comes from. Doing the exact same thing every time you do something, which is why, Paul, I say exceptions. If you say, these are my rules, but I'll form an opinion if this happens, and these are my rules, and I'll form an opinion if that happens, this gets new users in a lot of trouble because you will make exceptions to just be active. So focus on rules adherence. And then, guys, the second thing is get your pictures into the spreadsheet. Nexgen gives you a spreadsheet. I give you my spreadsheet every day. I'm going to do it right now. I'm going to drop it in the room. Make sure you grab it. The first tab on your spreadsheet, ladies and gentlemen, is your trade journal. Every time you take a trade, you should be annotating the chart. This is what I saw. This is what I did. This is how I felt. This is where I got in. This is where I got out. And you're not doing that to stay busy. You're not doing that because I'm like, oh, these guys need to do some work. You're doing that because you're going to come back and study it tomorrow. Everything that I did yesterday, I looked at this morning, guys. If I made a mistake yesterday, and I made a mistake yesterday, I went back and I looked at it today and I said, how do I avoid this mistake today? And I asked myself, what worked and what didn't work and what felt easy and what helped me relax. I had an outstanding day yesterday, but I still made a mistake. It's okay to make mistakes. I had an outstanding day yesterday, but I still took a loser. It's okay to take losers. The key is that you study this each day so that you begin to take the correct losers, the one with all the advantages, the ones that have been proven to win more than they lose. So you're going to fill this out. How did I feel? What was it? What did it look like? What was my result? And then on your notes section, guys, this is where you're going to put the feedback that I give you in the room. This is where you're going to say, Mark said I keep trading in determination conditions, or Mark in the room pointed out that I had 6 trades and 5 of them won with momentum. And the one where I fought that momentum, things didn't work out so well for me. And guys, one of my gifts, if you will, is I recognize patterns in people. I recognize when you're doing the same thing, even if you don't recognize it. I recognize when you make exceptions to your rules, what they are, and I'm going to help you avoid them. But I can't do that if you don't post in the room. Your second tab, or third tab, excuse me. This is where your favorite looks go. This is where, when you're building a trading plan, every time a trade fits your rules, guys, this is where you're going to put it, because you're going to come back and you're going to study these looks. Give it 3 or 4 minutes every morning. What is my perfect long? Well, my perfect long is odds favorable momentum and a clear path and a pullback to support. And we took this one in the classroom yesterday because it fit the rules 100%. So what I'm doing is I'm trying to repeat that each and every day. Cav, I'm not sure why it wouldn't open for you. The one that I put in the room won't open for you. When you click on it, it downloads. So you have to go, after you click on it, did you go to your downloads folder? Oh, there it is. And then from here, you should be able to open it up. And if not, I would have to get on your computer to really figure things out. And then, yeah, you can, so what you can do, Cav, is you can even download it every day and save it over your existing one as well so that it updates. And guys, the final tab on this one is the client trades. This is where you guys have done amazing things. This is where lessons from the classroom have come together. This is where I've got 300 pictures. Yeah, Cav, that's a computer thing. I'm not sure how to fix that one. But your media player shouldn't be trying to open Excel. Excel should be trying to open Excel. Microsoft Excel. So you may need to go to Settings, Apps, Default Apps, and for Microsoft Excel, make sure that it has Excel as the default rather than Media Player. How is that for a mouthful? There you go. That's why we get married, right? Yeah, my wife's the tech wizard too. Always marry up, gentlemen, if you get the chance. This third page, guys, I've got entries for the high probability trend trade. I've got you guys using all the great stuff, finding great trades. If you're a NASDAQ trader, I've blown out a lot of accounts for you, learning to trade the NASDAQ. There's ideas on management, patterns that repeat themselves, a whole section on termination conditions. But I'm going to tell you right now, impressed you with what, David? That I married up? The most important thing for you guys to do is make your section look like my section. When the rules are met, when everything is there, guys, this is the best of the best. You're committing this to memory. And then that's kind of where you go. Post in the room, lots. I mean lots. Fill your spreadsheet up, guys. The more you do something, the easier it becomes. The more you annotate a chart, the easier it becomes to recognize what it is you're looking at. The more you use words to associate with looks, the better it becomes for you guys. We're going to learn the trigger line of Fibonacci rules for when it's okay to trade. Guys, you have the beautiful advantage of simulator, of not having any risks whatsoever, having no financial loss, just practice. And man, I'm going to tell you right now, you don't know where your limits are until you go screaming past them. So don't be afraid to make mistakes. Just make sure that you post it in the room so that we can work together to get away from them. But what I don't want you doing, and I see this a lot, is breaking rules on simulator, trying to get simulator rich. Because those short-term victories, guys, they turn into long-term failures. What you're doing is you're teaching yourself that it's okay to break your rules, and you will get lucky just enough to make you feel this false sense of security. And then once you go live, it turns into this giant spiral. I've seen it so many times. We're going to simplify heavy today. We're going to talk about the high probability trend trade first. And this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade where each indicator on every chart is going to agree for the trade. And guys, we focus on this one initially because this is the trade that makes you a chart reader. And if you commit 30 days to the high probability trend trade, 30 days of scrolling back and finding entries, 30 days of taking pictures of advantages, guys, I'm telling you right now, it's difficult to not be good at this trade. And then once you're good at that trade, it opens doors for all the other opportunities. But you have to know what looks you're going to commit to. You have to fill that spreadsheet up with pictures of trades, with pictures of advantages. And what happens is the more you fill the spreadsheet, guys, it becomes easy. So if you look at 300 pictures of strong triggers and nothing in the way and perfect entries, guys, that gets burned into your brain, and suddenly the market feels like it's moving a lot slower. So post in the room, tell me what you see. Use that spreadsheet. Go back and study it each morning and keep it simple, dagnabbit. We're going to work with 2 charts. That's it. That's all you need for the high probability trend trade. And honestly, 66.6% of the work gets done on the large chart. Guys, this large chart is a broad stroke of a brush. It is a slow-moving chart. It is a molasses in January, boots getting stuck in the mud kind of chart. It doesn't move fast. But what it does is on the most current bar, it's going to define the direction of the market. You're going to understand which direction you should be trading on the background color of the large chart. It's also going to define momentum. Guys, this is your first advantage that your rules provide. And it's also going to let you know when you reach areas that may be problematic. All of this happens on the most current bar. And then once your first 2 rules are met, we go to a smaller, faster chart. We go to a refinement chart. And guys, the refinement chart is a tricky little devil because it's going to try to make you think that it trumps the large chart, and you're going to worry about things you shouldn't worry about on the small chart, when all it really is an entry chart. This is where you're going to refine the broad stroke of a brush, because the broad stroke defines momentum, because the broad stroke defines areas, and you're just going to pinpoint where the market is likely to continue, and this becomes your entry for the highest probability trend trade. That's rule number 3. So there's only 3 rules, and there's only 2 charts. Each rule provides an advantage, and your goal should be to speak to yourself in terms of advantages. When you look at a chart, don't say, is there a long? Say, do I have momentum, a clear path, and an entry area? Don't say, I think it's going to go down. Say, do I have momentum, a clear path, and an entry area? Because when you have these 3 advantages produced by these 3 rules, guys, you have a high probability trend trade. You have a trade that typically wins 70 to 80% of the time. You have a trade that creates confidence through the memory of success. And you have a trade that is teaching you to be a chart reader. So these 3 rules, guys, on only 2 charts, start with strong trigger lines on the large chart. And the large chart defines strength, strong triggers, with the T3 trigger lines. There's small triggers. 2 lines create the small triggers. They work together. They're a team. 2 dashed lines create the large triggers. Again, they're a team. So when the small triggers break above the large triggers, when both sets are wide, they're angled in the direction of the trend. And here's the kicker for you brand new users to keep it simple. The colors have to match. If my background is green, the market is going up. I'm only looking for rules to be met for high probability trend trades. That means that my small and large must also be green and wide and angled in the direction of the trend. And then the space between the 2, like scissors opening, guys, that is the strong trigger look. That is the look that lets me know that the odds are favorable for the market to continue up. And when I have this odds favorable momentum, that's what you're going to hear in class all day long. This is the best of the best of the best time to buy Fibonacci support on a smaller, faster chart, using that refinement tool to take one bar on the large chart and pinpoint exactly where that tail is most likely to happen. To be able to buy low when everything is going up, guys. That's how the two-part process works, but you've got to believe in momentum because momentum pushes the market in the direction of the trend. Momentum can break those key areas where problems can happen, and momentum, God bless it, will cover some of the mistakes that you guys make as new users. Insist on momentum, and in a downtrend, when the background is red, small's below the large, large are wide, they're angled in the direction of the trend. Guys, that's a key part of it. Flat triggers don't produce momentum. The space between the two lets me know that the odds are favorable for the market to continue down. And when the market is likely to continue down, when the odds are favorable, I'm going to sell Fibonacci resistance. I'm going to sell high on a smaller, faster chart. You will be able to pinpoint exactly where that tail is most likely to happen using rule number 3 on that smaller, faster chart. And guys, momentum leads the way. Momentum is the first rule for a reason. But momentum doesn't last forever. And eventually those small triggers begin to work their way back into the large triggers. And we call this a weakening of the large triggers. And anything can happen up or down. So strength is amazing. Anything can happen doesn't create a whole lot of confidence in my brain. But as you grow with the software, you're going to find more and more opportunities. For the brand new user, odds favorable momentum, sell a pullback to Fibonacci resistance. This is your plan for success. As you grow with the software, as you become a chart reader, when both triggers are down and one of the two small trigger lines is inside of the large trigger, this is the first sign that momentum is slowing. It'll be easy and effortless for you to look at your large chart and say, oh, momentum is slowing. My advantage is going away. I can still take a short trade, but I'm going to have to use my chart reading to make sure that all the other charts agree that everything is perfect outside of that loss of momentum. And then when the smalls work in, and anything can happen. Well, this is where most of you should simply just say, anything can happen. I don't know. It might go up. It might go down. There might be a fight. Hell, I don't know. I don't have the momentum to push this market in the direction of the trend anymore. And then when those anything can happen triggers smack into Fibonacci areas, guys, these areas are more likely to hold. They're more likely to bounce. They're more likely to create a fight. And this becomes a huge red flag for you to not take any more trades in that direction. And that's what gets us to rule number 2, where you can define whether or not you have a clear path. So on the most current bar here, we've established direction with a green background. We've also established momentum. Smalls are above the large are wide. There's space between the two. And you know what? Let's pull up a live market chart. What do you say? Let's see if we can find a little momentum. Ooh, crude has been absolutely grinding, hasn't it? Small triggers below the large triggers, space between the two, they're wide. Excuse me. The odds are favorable for this market to continue down, right, until it hits what we're about to study, termination conditions. But guys, you can scroll back on a large chart and you can see that momentum isn't a constant. Momentum doesn't happen all day, every day, but when it does, when there is separation, that market tends to move in the direction. And when there isn't separation, well, we start to see those deeper retracements. We start to see those problems that would pull us out of these long trades. Odds favorable momentum. Guys, look at that run. Smashes through Fibonacci areas. When it gets weak at an area, sure enough, there's a retracement. You can go back and you can take pictures of odds favorable momentum all day long. You can take pictures of the best of the best. You can commit this look to memory. And then guys, what I really want you to do is I want you to pull up your spreadsheet and I want you to start putting pictures of that one rule, strong triggers being met. And I want you to build a catalog where you can go back and look at it 50 times and annotate it and really commit this look to memory so that you never miss it when the market is live. And I want you to do the same thing for weak triggers, because only one of them gives you the green light. Only one of them gives you the advantage. So you should know what it looks like when that advantage goes away. We're going to talk more about how to use this section, but I want you to not just look for trades. I want you to look for advantages. I want you to take your capture software, And I want you to take a giant picture of those strong trigger lines, and I want you to write on that picture with the call out, smalls above large, wide triggers, odds favorable momentum, rule 1 met. And I'm telling you right now, guys, if you do this, you're never going to miss it. And see that little tail? Write it. Buy fib support on smaller chart with this look. And what you're doing is you're committing this look to memory. This is exactly what I want the market to look like each and every time I look for a trade. Upload it. Get it to that screencast. And guys, if you're not sure whether or not, if you're not sure whether or not that is actually odds favorable momentum, if you're uncertain about whether it might be weak or strong, drop it in the room and get a little feedback on it. But if it is, drop it into your spreadsheet. Get it in there. Come back and study it every morning, because eventually you're never going to miss it. And guys, that is definitely an advantage that you don't want to miss. But it doesn't happen all day. Sometimes you have to be patient. Sometimes you have to wait. And then sometimes, even with odds favorable momentum, it hits what we call a termination condition. Again, areas are defined on the large chart. Rule number 2 says, hey, Mark, don't trade into termination conditions. Termination conditions must be false. Termination conditions are those areas that are likely to stop the market, that may reverse the market, that may create an untradeable bounce. Guys, your Fibonacci areas are where decisions are made. Your Fibonacci areas, these red resistance, blue support, yellow 1-to-1s, divergence highs, magenta lows, these lines are where stuff happens in the market. These lines are where the people that control the market make decisions. Guys, these lines, and I took this one this morning, areas are where decisions are made. Buyers try to push up from them, sellers push down. Entries are taken, exits are taken, fights occur. I want you to see how price on a smaller chart looks like a seismograph right at that key Fibonacci area. Guys, the most amazing thing about this software, and if you don't believe in fibs yet, scroll a little bit, is that you will know without hesitation where the market is likely to stop. You're going to understand where it has the potential to break, and you're also going to know exactly when the market has broken these key areas and it's time to look for more trades. And you're going to do that with a very simple comparison, guys. You're going to take these areas where decisions are made, and you're going to do a comparison of the area and the T3 trigger lines, the same ones that created momentum. And here's the simple recipe, guys. Here's the keys to the kingdom for termination conditions. The first thing that has to happen is that price reaches an area. Guys, if this is where decisions are made, price has to reach that decision-making point. In this case, it's Fibonacci support. When price reaches Fibonacci support, if the trigger lines remain above, don't take any more short trades. The area is either going to reverse the market, it's either going to break, or there's going to be a fight that you don't want to be a part of. And I want you to accept this from day one. You're not in control. You don't know. The only thing you will ever be in control of is whether or not your rules are met. And your rules say, if price reaches an area and the triggers don't break, sit on your hands and do nothing. You don't have a clear path. Rule number 2 isn't met. Well, when both the small triggers and the large triggers, both lines of both, get through an area, well, now that area is broken. And you can see on this picture how support begins to behave as resistance. You can see how there's odds favorable momentum. The most current bar hasn't reached Fibonacci support. Guys, you're going to pinpoint right where that tail is most likely to form. This becomes a pretty awesome short trade. It's a short trade with momentum. It's a short trade with a clear path. The only thing missing is that refinement chart that shows you exactly where it's most likely to continue. But guys, there's only 2 options for new users. There is price reaches an area. No trigger lines break. Don't take that short trade. It may reverse the market. There is small and large have broken the area. Support becomes resistance. Resistance becomes support. The path is clear. Keep it simple in the beginning. Price reaches, no triggers through, it's not broken, no clear path. Rule number 2 is not met. And guys, your job is to stick to the rules, to say my rules are either met or they're not. Smalls above the large, right? Here we go. Smalls, large, above the area. The area is now broken. The path is clear. That's what it looks like. This is your high probability, guys, right here. This is your super low, ugly probability, termination condition. Your chart reading is going to take you to medium probability. Guys, medium probability trades are defined as when most indicators line up for a trade, however a small issue exists. In this case, your small issue is that the area hasn't broken yet. Your small triggers have absolutely smashed through. Your large triggers are lagging behind, but you do have odds favorable momentum. Odds favorable momentum is capable of breaking areas, ladies and gentlemen, but it's not guaranteed. So when I don't have a clear path, I don't have a high probability trend trade, which means, let's go to my little slide thing. I built this for the class, and I absolutely love using it. If I am sacrificing a clear path, I'm going to insist on momentum. I'm going to insist on the perfect entry area. And guys, this will be your first medium probability trade, areas with the potential to break. I will give you a plan to take it in the most effective manner. It will be up to you to decide whether or not you want to do that. And let me show you what it looks like when areas aren't completely broken. Where'd that picture go? I want you to see the dance on an area that only has the potential to break. Guys, this becomes a very difficult trade. And I'm going to give you a set of rules to keep you from getting caught up in this fight that happens at the decision-making point. So, dun, 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 dun. Not broken, potential to break, broken. Those are your options. We're going to talk about divergence as well, guys. Divergence is a loss of momentum. Divergence simply means that the market went down and the market went up, and when it did, momentum didn't follow. Once again, I've got a picture for you because Andy asked some great questions this morning about it. What is divergence? It is when price, the white line, and momentum don't agree. Momentum doesn't follow price. When this negative number prints, when this magenta line prints from a high, all it means is that there was a loss of momentum. It's not a termination condition. Price did not reach this area. Price created this area. Your software runs the calculations in the background. Guys, there was a time where you had to do it yourself. You don't have to anymore. And if momentum doesn't follow the price, the negative number will print. The magenta line will form on the third bar. It doesn't happen instantly, guys. There's a whole set of calculations that your software runs to make it happen. You won't see this line print until the third bar, which is why this divergence is not a termination condition. But what happens is when there is a loss of momentum, when divergence does print, it will extend to the right until it's no longer in play. And if price reaches a divergence low and the triggers remain above, it's a termination condition. And if price trades below this divergence line and then back above, well, now it's what we call a pivot stop out. You'll see them at highs, you'll see them at lows. Pivot stop outs are termination conditions. Good morning, PC. Pivot stop outs can stop the market, can reverse the market, may create an untradeable bounce. And these pivot stop outs become even more powerful if they coincide with Fibonacci support or resistance. So, not a termination condition until price reaches the area and the triggers remain above. And it's important that you guys remember that. A pivot not in an area is not a termination. This is just down to up. A pivot that doesn't reach the area is not a termination. It's just up to down. But if price reaches Fibonacci support, in this case yellow 1-to-1s, and the triggers remain above, well, now it's a termination condition, guys. Now it's an area that may stop the market, that may create an untradeable bounce, that may ruin your short trade. And guys, this is a textbook 100% termination condition. Can you guys give me a Y in the room if you're with me on this? If you're feeling pretty good about the idea that if price reaches Fibonacci resistance and the triggers don't break, it's okay to sit on your hands and do nothing. And if price retraces all the way back to Fibonacci support and the triggers don't break, it's okay to not go short. That one kind of kept you safe twice, didn't it? And look at how support holds here with every one of the triggers above. And look at how that divergence high reversed the market with none of the triggers through. And once again, guys, I'm going through crude oil and it is putting on an absolute clinic of why we respect these Fibonacci areas, why we don't trade directly into them, why one divergence may not kill the party, but a pivot stop out can screw up your good time. And I'm telling you right now, guys, if you go back, and I'm going to do it again, and you grab your capture software, and guys, everybody's got it, take a picture of the chart, click that camera, use that call out button, and I want you to write exactly what it takes. Price reaches an area. If triggers stay above support, it's a term. If triggers reach resistance and if price reaches resistance and triggers below, it's a term. No clear path. Rule 2 not met. And guys, I'm going to tell you right now, if you write out what the recipe is, if you take pictures of it, you're not going to get caught going short. You're not going to get caught going long. And then you're going to have to take this and you're going to upload it and you're going to get that screencast link. And if you're not sure, you're going to drop a picture in the room and you're going to say, Mark, is my understanding of termination conditions correct? Is my picture really kind of putting it in play? Am I doing it correctly? And guys, if the answer is yes, get to your spreadsheet, drop it in and say, hey, guess what? No clear path. And this is exactly what it looks like, and I don't want to get caught into it. David, the difference between divergence when first is higher than second on an upswing or lower than the first on a downward swing. We'll get into that right now. We're almost there, David. But before we get there, and I will talk about that, termination condition textbook. And then it bounces all the way up to resistance, guys. And all the triggers remain below. And it's a termination condition. And then it pushes all the way back down to those trigger lines. And since the trigger lines don't match, I don't even have rule number 1 met and no trade. And I'm still below the areas, no trade and no momentum, no trade. And no trade 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 and no trade. And guys, 90% of your day is waiting for these jerks to figure it out. 90% of your day is saying, man, I don't have to be in every move. I don't have to be the first person in. I don't have to hope an area breaks. And that 90% is typically rewarded when the market gives you momentum, when all the triggers get above resistance and it acts like support. And then guys, there's your 10%. This is where you're buying Fibonacci support on a smaller, faster chart. This is where the rules for the high probability trend trade are met. And the cool thing is that if you learn how to not lose $1,000 over here, then the whole 400 to 500 that can be made here gets to stay in your account. And guys, termination conditions are designed to keep you safe, and the recognition of these termination conditions will keep you from throwing away money. It'll keep you from getting caught in consolidation. It'll keep you from just making common mistakes that people typically make. And you're going to trade into them initially, and you're going to hope that they break, and that's okay. I want you to put them in the room so we can talk about it. Is everybody good with terminations, with price reaching an area and the trigger lines not breaking? And all of this happens on the large chart, guys. The large chart has defined direction. The large chart has defined momentum. The large chart defines the areas. The large chart does the crux of the work, guys. They do more work. It gives you the advantages of momentum, the advantage of a clear path. I want you to develop this huge trust in letting the large chart leading the way. Sometimes The small chart will give you a little information that the large chart can't. There's going to be times where the large chart seems to turn from nowhere. There's going to be times where the large chart seems to reverse not from an area, even without divergence. This next termination condition, and David, this is for you. This next termination condition happens on a small chart. This next termination condition is the only termination condition on a small chart. Lines are used on the large chart to determine where the market is likely to stop. Lines are used on the small chart to determine where to enter, your highest chance of success for a high probability trend trade entry. But if I get 3 divergences in the same price range on a small chart, 3, 1, 2, 3. 4 is too many, 2 is not enough. 3 divergences in the same price range on the small chart may terminate the trend. This lets me know that rule number 2 isn't met. This means that I no longer have a clear path. And this means that I shouldn't be looking for any more high probability trend trades short or high probability trend trades long. And then I'm trying to see, and then David, you're talking about if you have a divergence and then a second divergence higher on a smaller chart. Am I reading your question right? You show me a picture of the ES, please, David. Please don't make me chase markets and what you're looking for. Show me a picture. Pick of the best trades for you. 8 range. WPB, I don't know what that means. HVA after. Oh my gosh. David, we'll hit that, I promise. So guys, as far as terminations, 3 divergences. That's rule number 2, not met, no longer a clear path. Let it be easy. David, what you may be asking about is management. And when you learn to manage trades, a second higher divergence might take you out of a trade. A second lower divergence might take you out of a trade. But you have to know what kind of trade you're in. You have to look at the large chart. There's so many different things that you have to think about at that point, David, that I can't blanket it with just 2 divergences on a chart. It's easier if you allow it to be simple in the beginning. 3 divergences will keep me out of a trade. And that's it. If it's a high probability trend trade, 3 divergences will keep me out. We're only focusing on entries right now. And what you're talking about is more of a management thing. But there's so many variables that go into management. If you're not a chart reader yet, it becomes difficult. David, are you going to show me that picture of the ES? So guys, large chart defines direction. Large chart defines momentum. Large chart defines areas. Large chart leads the way. Large chart gives me the overall opinion of the market. It's 3 divergences in the same price range, David. It's a termination condition. That's it. That's it. 3 divergences, same price range. Termination condition. So let me do this, and let me say this about it. I know exactly what... So people show me this, and then they say, but Mark, it went up, right? So that's such a good question, David. Let me give you the answer. And I'm going to take a picture of this one. So, on its own, 3 divergences may reverse the market. And the key word here, guys, is may. It may terminate the trend. It's not guaranteed to terminate the trend. But if you look at 3 divergences on the small chart 100 times, more often than not, it reverses the market, creates a bigger push. Your statistical advantage is gone. That's just 3 divergences. 3 divergences with weak triggers increases the likelihood. 3 divergences with weak triggers and a higher pivot or a lower pivot when it's the final increases the likelihood. So David, great question. 3 divergences may terminate a trend. 1, 2, 3. It's more likely to do so when you have weak triggers. It's more likely to do so when the third is lower. So what happens here? 3 divergences pushes you all the way down to the bottom of the triggers here. But somebody made the decision to go up. Somebody made the decision that they wanted the market to go up. And that was right about here at 11:24. And David, it's not a coincidence, my friend, that this dance, that this fight, that these divergences occurred right at a Fibonacci area. So these divergences keep you patient. They keep you from getting stopped out of the same trade 3 times. Does that make sense, David? Beautiful question. Awesome question. And I love that you're showing it right there at that fib. Guys, if you don't think decisions are made, this is buyers and sellers. David, this may be the greatest picture ever in regards to how decisions are made at fibs. And all it does is if you take the first one, right? These 3 divergences, say, man, don't get whipsawed, David. Exit, make a little money. Let's let it break, and then we'll look for that pullback again. Great question, man. So what you had was 3 divergences that may have stopped the trend, but ultimately, momentum won. Momentum on the large chart beat the 3 divergences, but the 3 divergences were enough to create enough indecision that it would have taken you out of a high probability trend trade. David, that is an awesome, awesome chart. So guys, large chart's given us everything we need to look for an entry. Large chart has told us that the market is going up with a green background. The large chart has given us odds favorable momentum with strong triggers, rule number 1. The large chart hasn't reached Fibonacci resistance, but it has cleared the previous. I have a clear path, and now it's time to refine on a smaller, faster chart, guys. And on the smaller chart, we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We are literally going to pinpoint where the market is most likely to continue, that we're going to wait for it to come to us with a limit order. But where the large chart says up, where the large chart says clear path, where the large chart says odds favorable momentum, this is what the large crowd wants, guys. This is what the people in control want to have happen. There's no reason to ever fight these guys. But on the small chart, there's these yahoos that don't care what these guys say. Sometimes we are those yahoos, but we don't have enough money to create a pushback. These guys do. And they create this little retracement in price that's counter to the underlying trend. And guys, we're going to pinpoint exactly how far they're likely to push it by using areas inside of favorable large triggers, by using areas that are inside of those same trigger lines that we use to create momentum. Whoops. And I'm going to show you, when I say favorable large triggers, I'm going to show you exactly what I mean. And I'm going to tell you guys right now that this creates an advantage. Favorable large triggers mean that your large triggers, which are the smooth, the same ones that we use to determine momentum, they're native to the 5-1 chart, and your synthetic triggers, which happen to be the large triggers from your higher time frame. When these two are one on top of the other, when they're riding piggyback, when they are tight, 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 it is going to create the opportunity for you to have the smallest window of opportunity, the absolute smallest point where the market is likely to continue. Trigger lines are moving averages. Trigger lines are where I expect the market to correct. When they're one on top of the other, that correction point becomes pretty small. But we don't trade from trigger lines, guys. Trigger lines aren't enough to stop a market. So typically, I don't blanket here. So when you put an area inside of them, good morning TLC, when you put fibs, mid-bands, or yellow 1-to-1s inside of favorable large triggers, guys, what you've done is you have pinpointed where the market is likely to continue. You've given the market something to bounce off of right at the correction point, and this entry becomes your highest probability trend trade. This is where the rules are met, where you're getting in where the market is most likely to continue. And guys, this is the best of the best. So when your large chart says up, your large chart says odds favorable, your large chart says clear path, your small chart's going to be screaming to the upside. Green bars, green triggers, green mid-band, blue fibs, everything says up. But guys, we have to wait. This isn't our entry. We don't jump in. We're better than that. We're going to wait for that small crowd to do their thing, and it starts with a reversal bar. And this reversal bar says, hey, guess what? The small crowd is going to try. The small crowd's going to give a push. The small crowd is going to do their best to fight everything the large crowd says. So at the time of this reversal bar, this is what I want you guys to get in the habit of doing. I want you to find your large triggers, your synthetic triggers, and I want you to mentally or even physically put a big box around the triggers from the highest line of the triggers to the lowest line of the triggers. This is your correction point. And I want you to remember this. This isn't where the market is likely to continue. This is your correction point. This is where I expect price to get to. But guys, look how big that range is. So what you're going to do is you're going to refine that. You're going to go from the highest point of support to the lowest point of support, inside of favorable large triggers. And this black box represents where the market is most likely to continue. The black box represents exactly where I expect the market to bounce from the highest point, mid-band, to the lowest point, yellow 1-to-1s. And guys, this is your entry. This is 20 days with Nexgen. Learning to recognize the advantage of momentum. Learning to recognize whether or not your path is clear. Learning to recognize whether the market is going up or down. Learning to patiently wait for the reversal bar, to identify the triggers, the areas within, and you're going to get trust in this. You're going to develop trust so much that you will activate a limit order, a tick or two above, and you will buy that market as it comes down to you. Let's change the color of that one. Let's go hot pink. And if it hits your limit order, you're in a trade with momentum, a clear path, and entering where the market is most likely to continue. And here's the deal, guys. If it goes past your limit order and keeps going down, you're not going to panic because you're still inside of your window of opportunity. Even if it goes all the way down to those yellow 1-to-1s, you are still where the market is most likely to continue. And you're not going to put arbitrary stops inside of that window. You're going to be able to define it. Limit order is what you're going to have, Jas. A market order means buy now. So that means when it gets there, you just hit buy now. Wherever the market's at, right? We're better than that, brother. You're going to have like 3 or 4 minutes waiting for it to come back to you. You're going to know exactly where it is, and you're going to have that thing waiting, and you're going to know where the market is likely to continue. And you're going to get in at the top because the large chart is strong and there's nothing in the way. And because you guys can define where the market is most likely to continue, because you understand 100% where that bounce is supposed to happen, you can put a protective stop where the market shouldn't go. You can put a protective stop 4 or 5 ticks below that window of opportunity. And if the market exceeds that lowest point of support inside of favorable large triggers, it's going to go headfirst into your stop, guys. And guess what? You're going to lose. Rob, market means buy now. Buy instantly at market price. A limit order means that I'm literally waiting for you to come back to the market. We enter high probability trend trades on limit orders, ladies and gentlemen, because we know exactly where the market is most likely to continue. We know exactly. There's only one window. TLC. From the highest point of support to the lowest point of support inside of favorable large triggers, there's only one window. There's a high point, there's a low point, and there may be even points within. But the highest probability trend trade entry, ladies and gentlemen, comes from the highest point inside of favorable large triggers, because the large chart has odds favorable momentum. It is hauling butt to the upside. The large chart has no areas, nothing to bounce off of. We are relying on a small group of yahoos to push against the large crowd. That's literally the easiest way to say it. We're counting on this little group of people to push against everything that says up. So we're going to get in at the top, guys. And some of you are going to be tempted. Well, maybe I'll put my entry right here. And every now and then it'll go to that second spot. And you're like, whew, I didn't have to give anything up. And then some of you will put your entry right here. Some of you will put your entry right here. The rules say your entry goes a tick or two above the highest point inside of favorable large triggers. And I'm going to tell you guys, if you do this, if you follow this, you're going to be mad as hell if it doesn't hit that second fib. You're going to be mad as hell if it doesn't get this one and it does everything that your large chart told you that it was going to do. Guys, your job for the first 20 days, your goal for the first 20 days, the only thing you need to be focusing on for the first 20 days is identifying where the market is most likely to continue and developing the trust to enter at the top of that window for a long or the bottom of that window for a short. That's it. Because if you know where it's likely to continue, you can put your protective stop 4 to 5 ticks below it. My first box when I was drawing it out, TLC, the first box that I drew out is I have to identify my triggers so that I know where to look for areas. Does that make sense? So I identify my triggers, and this is where I'm going to look for areas. So the first box, once you identify them, you're done with that part. Now we're just going to look for fibs, mid-bands, yellow 1-to-1s inside of them. And we're hopping in at the beginning, guys. And if the market is inside of that window, I'm holding fast. If it goes beyond that window, 4 or 5 ticks, I'm exiting the trade. Guys, anything that wins 70 to 80% of the time is going to lose 20 to 30. Your stops will get hit. But the cool thing is, the awesome thing is, no, Muser, this is my window, right? I want it 2 ticks above that highest point of support because my expectation, Muser, is that price is going to correct to that point, right? Does that make sense? Let's get that first. Does that make sense? So what if this mid-band holds to the tick? What if that highest point of support is exactly where it reverses? If my limit order is 2 ticks below it, I'm screwed. I missed it. But if my entry is 2 ticks above it, I have less chance of missing this trade. And guys, once you develop trust in this methodology, when you go through and you study this trade and you realize that this wins 70 to 80% of the time, and you realize that it creates a statistical advantage, it gets easier and easier to sit through these little bits of overrun. But until you develop the trust, they're going to scare the ever-loving crap out of you. Guys, your initial stop goes where the market shouldn't, below the window. Once it gives you a reversal bar in the direction of the trade, you can actually reduce your risk pretty dramatically. And it's not uncommon to find Nexgen users with 3 to 4 ticks of risk. And this is the entry that typically reaches the profit target. This is the entry that creates all that confidence. So if you focus on the entry, guys, if you put it together, large chart says up. Large chart has a clear path. Small chart defines where this tail is most likely to happen. The small chart defines where that bounce should happen. The small chart tells you exactly where you need to enter because news just happened, Zorro. It was 10 a.m. news, and it was high probability. And guys, you can go back and you can study this look by scrolling back on your large chart. We do have it figured out, Rob. You can go back and you can scroll these tails on the large chart, guys. Scroll back, circle them. And let's see if we can find an example. If I scroll back and I find my rules met on the large chart, if I find odds favorable momentum and a tail, and I don't want you guys to get caught up on the termination condition just yet. If I go back and I start circling these tails and I start looking and identifying where there was momentum, Look how that circle pulled right back to the mid band. This one had a termination that created a bounce, but you see how it comes back to the triggers, back to the areas inside of the triggers? Guys, I can go back even without odds favorable momentum, and I can circle a tail, and I can say to myself, did I have a trade here? The first one, no, I just didn't. My rules aren't met. But what happens when we have it with odds favorable? What happens when everything is screaming in the direction of the trend and the area has the potential to break? Let's see what this one looks like. Make it big and yellow so it's easy to find. Was that it? There's one there, but the third divergence killed it. So you're going to go back and you're going to start to develop trust in these looks, guys. You're going to start circling these tails. And you're going to say, holy smokes, look at that. And it pulls back. And you're going to keep doing it. And you're going to say to yourself, what does it look like for my rules to be met? What does it look like to have a high probability trend trade? What does it look like to have my rules met to take a trade? Guys, odds favorable, potential to break but not broken. No divergence, no loss of momentum, and it pushed down. Once divergence starts printing, a loss of momentum coupled with an area not broken, sure enough, you're getting stopped out. That's going to be in the KISS plan that we talk about. So I'm going to leave you guys with a live market for just a second. I'm going to go run a lap. I am going to stretch my legs. I've got a feeling. Yeah. Rob, my opinions are absolutely useless, I have found. My opinions cost me money. My opinions are rarely the truth in the market, which is why I have to trade rules, which is why I have to trade a pattern that has been proven to win more than it loses. Because the second I deviate, guys, I start to lose. My losing days don't happen because I suck at this. My losing days happen because I break my rules. And I find that a lot of people do that. So the more you trust your rules, the easier it is to adhere. So I'm going to take 5 minutes, guys. Stretch your legs. When I come back, we'll start looking at charts. We'll look at the live market. We'll answer questions. And if something sets up and we have a simulator, guys, we'll simulate it. We'll play. We'll manage through it. But I'm going to introduce you to the KISS plan when I come back, and then we're going to move forward. So I'll see you guys in about 5 minutes. You're so pretty. All right, guys, I'm back right now. And then, Paul, you were asking if that's an example of a 50-50 with divergence. What's the area that's not broken? The fib. The triggers aren't through. No divergence, perfect entry. Divergence, you take the exit. Isn't it brilliant, Paul, that all you have to do is follow a simple plan and things tend to work out pretty well? I love that. Everything about it. Everything about it. 50-50 with odds favorable. No divergence. Perfect entry. Divergence prints. Get out. Take your money. Wait for the next best. So, Paul, you did that 100% perfect, my friend. 100%. So, guys, let's talk about it. How do we know what's going on? How do we know whether divergence is good or bad? How do we know how we need to manage this trade, guys? You have a plan. One of the traders that has been with Nexgen, gosh, like 17 years, 18 years, I don't even know, it's been forever. And he started with us way back in the day, and all he does for a living, guys, is he trades. He trades 9 months out of the year. 3 months out of the year, he vacations. Not a bad way to make a living. But he told me once, a few years ago, he goes, hey, Mark, if you don't have a written plan, you don't have a plan. If you don't write down a plan, exactly what it's going to take to enter, exactly what it's going to take to exit that trade, you're going to be victim to your own emotions. You're going to be a victim to your fears. You're going to be a victim to your opinions. And he told me, he goes, don't make yourself a victim. He goes, I've known traders for decades. And the ones that don't have a plan, the ones that almost know their plans, the ones that kind of know their plans, but trade exceptions when their emotions tell them to, those are the people that typically don't stick around. So guys, this is a stepping stone in your learning journey. This is me giving you the most basic, straightforward plan to optimize your chances of success with the high probability trend trade and the 50-50 trade. Can everybody hear me? I just want to make sure you guys are quiet. Okay, cool. Thank you. And then here's the bummer. You're going to have to simulate, and you're going to have to study, and you're going to have to get class feedback, and you're going to have to practice. Guys, if you want to make $1 million a year, you don't get to just sit on your ass and listen to videos. You got to get some work done. But through that simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's my brother playing with AI to say, guys, once you're a chart reader, you're going to find your trade. You're going to find the stuff that speaks to you. You're going to find the patterns that resonate with you that are easy for you to find. And it's all going to happen because you became a chart reader. So your first trade as a brand new user should give you the gift of chart reading. It should make you a chart reader. You should be comfortable and confident in your chart reads, understanding where the market is likely to continue, where it's likely to go, where it's likely to stop. And this simple plan for consistency, guys, it reminds you in bold underlined letters, don't fight the large chart. Don't fight the large triggers. Don't trade in determination conditions. Guys, don't form opinions because the large crowd doesn't care about your opinions. They couldn't care less what you want. And I'm going to share the book for the weekend here. How to Commit Financial Suicide in One Easy Step. This was written by my brother. He's a best-selling author. Chapter 1, Warning Signs Your Friends Are in Trouble. They're trading against strong triggers. We've all done it. And the worst part is that some of us have gotten lucky against it, and we continue to do it. Chapter 2, your friends aren't paying attention. They trade in determination conditions. Again, we've all done it. But as a brand new user, you don't have the reps to understand when they're more likely to break. You don't have the understanding when it's okay to trade into a termination conditions. You shouldn't. You're not expected to. So in the beginning, you keep it very, very simple. You keep it very, very focused, and you define your entry. Guys, personalize it from day one. This is not Nexgen's plan that they're giving to you. This is not Mark's KISS plan. The second you take ownership, Paul Flowers, the second Troy Johnson, Bayswater, Merrim, who else is brand new in here? Zen Trader. The second you download this onto your computer, this is your plan. This is what you're committing to. This is your chances to optimize through the high probability trend trade and the 50-50 trade. And you're going to define your entry because great entries create manageable trades. I've never in the history of this checklist had anybody do worse than 70% winners. Never had anybody do worse than 70% winners. So just to make it a little easier for you, I'm also going to give you a checklist that you can print out and put on your desktop. And guys, this is going to be an opportunity for you to police yourself, to make sure that the advantages are in place, that it is a trade with a statistical advantage. This is what you should be writing on your chart as you begin to develop a recognition of the advantages coming into play. This should be your chart read each and every time you take a trade. And for you guys that are new, here's the same checklist, and that is a termination that reverses the market. That's a good top or bottom. There's also a video, my brother talking about what makes an area likely to hold, likely to break. You may want to watch that over the weekend. There's odds favorable momentum, both up and down. And there's also anything can happen. Low price of 1995. Sham, wow. Termination, potential to break, broken. There's your windows of opportunity, both long and short, guys, and showing you exactly where your limit order goes, exactly where the window is, and the things that don't make a difference in that window. So TLC, I'm going to address that right now. Let me close that out. And let me put these in, and that was a great segue, TLC. I appreciate that. Guys, I'm going to give you the high probability trend trade. I'm going to give you the checklist. I'm also going to give you the KISS plan, and I'm dropping each and every one of those in the room right now. I want you to take these. I want you to embrace the idea that this is a great place to start, that this is a pretty awesome opportunity for you to become a chart reader, to optimize your chances of success, to build a lot of confidence. Because great entries are easier to manage. And then TLC, when you talk about management, on this KISS plan, on this Keep It Simple plan, this is the most... No, they're not. One is the checklist, the other is the one with the pictures. So TLC, in the very beginning, when the earth was still, your only focus was getting it at the right spot, right? And then because it's a high probability trend trade, you have to manage it. Great entries create management. But I want you to embrace this phrase. I hate AI, ladies and gentlemen. I think it sounds it doesn't flow. But your management plan, TLC, will change as you change. Your management plan will grow as you grow. Your management plan will alter as your ability to read a chart grows. Does that make sense? So in the beginning, TLC, while we're all getting better at reading charts, while we're all starting to understand where the market's likely to continue and all those great things, your management plan should be just as mechanical. Well, I'm not going to say should be because you guys do whatever you want. But I can tell you that the highest level of success from the people that I've taught over the last 3.5 years comes from those people whose management plans are just as mechanical as their entries, whose management plans are nothing more than a series of if-thens. If I take the perfect entry at the lowest point of resistance inside of favorable large triggers, then my initial stop is 4 to 5 ticks outside of the window of opportunity. The one with the pictures is the third one in the list there, Miriam. So if you come through here, you can download each individual, or you can also just click on it and drag it over and drop it on your computer if you want. Drop it into a folder. That works just as well from Discord. But this is your plan. This is your checklist. This is your checklist with pictures. And guys, if you ever have trouble getting these for whatever reason, I'm not the most techie guy. I'll email it to you. Just send me a message and go, Mark, email them to me. I'll be happy to. Um, so your initial stop goes where the market shouldn't. And that's it. And guys, it's going to get stopped. Really, probably 3 out of every 10 trades, it's going to get stopped. 30 out of every 100 is probably going to get stopped if all you're taking is high probability trend trades. But the cool thing is more often than not, instead of getting stopped out, it's going to create a reversal bar. It's going to go in the direction of momentum and a clear path. And when that happens, if I get a reversal bar, then my new stop is 2 ticks above it. If then, guys, that's it. Not, I hope it doesn't come to here. I better leave it here. I want it to be there. Man, maybe I'll go break even. Sure, and Maram, I'm probably going to get that done after class or on a break. So don't freak out if it doesn't come straight to you. But get in the habit of practicing to grab the things I put in class, because I put a lot of great stuff in class. And guys, at this point, there's nothing for you to do. And I mean nothing. There is nothing for you to do at this point. It is either your stop gets hit, which is okay. It happens. Your stop's going to get hit every now and then, guys. Whoops, sorry. Or it's going to hit your first target. And your first target, brand new users, KISS plan, learning to read charts, all that good stuff. Not somebody that's been doing this forever. Not somebody that is experienced, that's a chart reader that can do all this stuff. Guys, this is for the brand new user. Your first target's $100 in the distance, because at $100, with all the momentum and the clear path, it's pretty easy to hit. And confidence comes through the memory of success, guys. So doesn't it make sense to give yourself the highest chance of success? And when it hits this one, TLC, the brand new user, the person that's not comfortable with chart reads, is going to go to break even. And the whole reason that we go to break even for the brand new user is because you guys get jumpy. You guys get terrified of giving anything back. So if you get paid and you go break even, it makes it so much easier to hold for the second target. The second target is only $200 in the distance. And if you took a high probability trend trade, you entered at the right spot, you didn't arbitrarily move your stops, guys, this is pretty easy to hit. And this $300 trade is amazing. If that's the best you could do every day, guys, that's a $72,000 year on a 2-lot. See, and Cav, there's the beauty, is I don't care why. I just hope you got long. That's it. I just hope you got long. Maybe I should pull up a gold chart and see if there was an opportunity. And then let's talk about it. TLC. If this is your entry, right? If this is your entry, and this is where your stop's at, when you become a chart reader, TLC, and remember, if your large chart is odds favorable to the downside, if your large chart is absolutely nothing in the way, if your large chart is giving you everything you need to feel like that market's likely to continue in the direction of the trend, guys, if you go break even after your first target, you might get stopped out. But the reality is that if it pulls back to this mid band inside of favorable large triggers, guys, it's still a high probability trend trade. And what you'll do is you'll start saying to yourself, well, I'm not going to move my stop yet. I still have every advantage. You're going to grow as you grow. And understanding what kind of trade to take makes it easy. Guys, I took this trade as a 50-50 this morning. And I was okay exiting with one divergence, and I did it conservatively, and I got slipped horribly. And then my rules for a 50-50 say that a second divergence takes me out, and that's exactly what I did. But I want you guys to see something. I was sleepy this morning. I had a late night last night. This pullback had odds favorable and a clear path. Two divergences shouldn't have scared me out. I literally exited at the absolute positively 100% best spot. Do you see that, TLC? What if that's my break even? Doesn't it make sense to just keep that stop where the market shouldn't go with this look on the large chart? That was the best spot to enter. Resistance inside of favorable large triggers with the rules met. And guys, I exited because I thought I was still in a 50-50 and a second divergence printed. And this is why you have to understand what kind of trade you're in so that you know how to manage it. And this is why you have to keep it simple. No, Rob, it's a different world now. It's a different world. Most tattoo shops close early unless they're on main streets. But I've got a private studio as well, so I do it whenever I want to do it. It just happened to go late last night. So the high probability trend trade, guys, this is the best of the best. This is the easiest. Become a chart reader, and then you will create a plan that's based on your ability to read indicators, to change it, to grow from it, to modify it, to be more aggressive, not only maybe not going break even, but recognizing on that larger chart when it's cool to hang for that next trade, for that bigger trade, right? It doesn't always have to be a $300 trade. In the beginning, it should be, because getting paid creates confidence, right? But once you start getting good at these and you start recognizing odds favorable and clear paths, you might get paid a little bit because that's the goal, but you'll let that last one run. You'll let that last one go the distance. And I'll tell you guys, this one went the distance. I still remembered it. But you've got to take these pictures. You got to have these management pictures. So 13.2 leads the way. One divergence doesn't scare me. It's still an area inside of favorable large triggers with the absolute best look. So knowing that it's a high probability keeps me from being focused on the divergence. If it were a 50-50, it would be a different story, because when you take a 50-50 trade, when the areas aren't broken, when they only have the potential to break, guys, let's go back to the little slide picture for you. When it's a 50-50 trade, I'm sacrificing a clear path. When it's a 50-50 trade, I don't know if the area is going to break. I'm just hoping that momentum breaks it, so I'm not going to sacrifice momentum. And because it's a medium probability trade, I'm not going to put an enormous amount of risk on the trade, so I'm going to let my entry area be perfectly defined. So on a 50-50 trade, the first thing that I'm going to do, and I think this is one of the most important parts, remember that this KISS plan is designed to optimize your chances of success, is I'm going to make sure that it's coming from a good top or bottom. And guys, my definition for brand new users of a good top or bottom is a no triggers through termination that reverses the market. It is if price reaches an area and triggers don't break. Hey, take care, Roku. Hey, your charts this morning, before you leave, they all looked exactly the same. They all had momentum. They all had a clear path, and you got paid on all of them. You, my friend, have developed your plan, and it looked beautiful this morning. Nice job. I hope you have a great weekend, dude. And I am going to show your charts in class. I'm going to make some people recognize that momentum. No triggers through, termination. This is a termination condition, ladies and gentlemen. It becomes a strong top when it reverses the market. No triggers through termination is just a termination. It becomes a strong bottom when it reverses the market. Guys, this reversal is only good to the next termination. And if that termination reverses the market, it's a strong top. This is such an important thing. No triggers through termination that reverses the market is a strong top or bottom for the brand new user. And it's imperative on a 50-50 because it means that decisions were made at a key area strong enough to reverse the entire market. Take care, Grant. I hope you have a good one. Your trades too, man. Really nice trading in there. I will be going through y'all's charts. It will be on the YouTube video if you want to see the feedback. And guys, if you ever need your charts analyzed before you split, let me know. And a lot of times you know what you're doing. You don't necessarily need the feedback. You just want to hear it. But if you ever have to run for work, for vacation, whatever, and you need me to get your charts before I start analyzing charts, just say the word. I'll take care of it. So for the 50-50, one area not broken from a good top or bottom, I'm not sacrificing momentum on the large chart, and I'm not sacrificing momentum on the small chart. This is imperative because momentum breaks areas. So it tells me no divergence on the 5-1 because does everybody remember what divergence means? Divergence literally means a loss of momentum, which means that I've lost my advantage, that this 50-50 trade isn't so good anymore. And then, exactly, Rob, and then I'll enter the area if everything is yes. And then this KISS plan reminds me that divergence is a deal breaker, that divergence screws up 50-50 trades. 50-50 trades are the most lost trades among new users because you guys refuse to believe, for whatever reason, that divergence removes your advantage. And then you get into the management. Once you're in, guys, the management, it is not a high probability trend trade. The management will be different. You can't manage a medium probability trade the way you manage a high probability trade. You can't manage a high probability trend trade the way you manage a momentum trade. They're different trades. So you have to know what you're getting into to know how to manage it. You're still going to use the window of opportunity. You're still going to go behind the reversal bar. But your KISS plan reminds you, if divergence prints, exit the trade. Your profit targets are going to be fast, guys. It's not a home run. $100 on the first or the first trouble spot initially. $200 on the second, get paid, get out. Guys, this is the KISS plan. This is, one more time, to optimize your chances of success. You will not trade this to the letter for the rest of your trading career because, let's be honest, you're going to get good at this shit. You're going to recognize advantages that you don't see today. You're going to see patterns that you don't see today. You're going to see opportunities that weren't there when you first started with the software. But until you get to that point, this is an outstanding way to keep you on the right side of things. This is a very concrete set of rules for you to learn to adhere to. This is a great way to develop the patience that it takes to be successful in the market. And I've never had anybody follow this plan to the letter and not be successful. So why do people deviate? Because we're dumbasses. Because human nature says, if a little is good, a lot is better. If a few rules are successful, then more rules will be more advantageous. If one chart is good and two charts is perfect, then three charts must be outstanding. And then we start to create exceptions. Well, I'll take a high probability trend trade even without without momentum, but I'll still convince myself that it's a high probability trend trade, and then I'll try to hold that thing forever, even though 3 divergences tells me to get out. Guys, if you keep it super simple, life is easy. It really is. And you're either going to have trades or you're not, and you're either going to have rules met or you're not. And when the rules are met, guys, life is pretty easy. Right to resistance inside of favorable large triggers. Let's see what it looks like over here. There's the one where everything is just smack dab, odds favorable, life is good. And son of a gun, it pulls right back to that midband and it pulls right back to that correction point right inside of the triggers. So all you have to do is start to develop a little bit of trust, right? When that termination reverses the market, when it starts to give you odds favorable momentum, if I get a pullback, guys, there's only one stinking area, one line inside of triggers. Maybe it gets there, maybe it doesn't, right? I'm not in control of that. So are there any questions about the high probability trend trade? Are there any questions about momentum, about a clear path? Are there any questions about being able to find that window of opportunity? Guys, this is where your spreadsheet pays dividends. especially you guys that are new. Guys, last weekend I went through and I filled out 10 to 11 pictures with annotations of each thing, each rule coming to fruition, each one being true. And I did it using this as a template. And yeah, guys, I give you a lot of stuff in this room. I know that. If you really want to get to where you want to be, do we traders get all excited when Mon number 2 gets delivered? I don't know what that means. If you really want to be good at chart reading, ladies and gentlemen, if you really want to be able to find this trade, if you really want to understand how to manage, you have to be able to recognize these looks. You have to know what you're looking for and what it takes to get you in. And this little chart reading 101. Oh, nice. Guys, you should have 2 monitors. It makes it easier. This little drill, it depends, right, Muser? What kind of trade? What kind of trade? What chart? Is one higher? Is one lower? Do you see how there's variables and you have to know exactly what you're looking for me to be able to answer that question? I can't answer it. How much does a bag of groceries cost? How much is a car? There's just not enough there for me to answer that intelligently. Guys, go through. Take 25 pictures of strong and weak triggers. Take 25 pictures of a clear path and a termination. Take 25 pictures of the 50-50 look so you can recognize it. And take 20 long and 20 short high probability trend trade entry pictures, guys. That is 165 pictures. This will take you 2 to 3 hours to do. But when you take the pictures, you have to annotate. Why are they strong triggers? Because the small are above the large. What does that mean to me? It means momentum, right? And if you do this for each individual picture, if you type it out, your brain is going to start to associate the advantages with the looks. And then you will piece together those looks to create a trade. And I'm telling you guys, I've told people to do this forever. And I'm like, dude, just go take a bunch of pictures. And everybody fights me on it. And that's your right. It's also your right and privilege to not be successful. But if you do this, guys, by the end of the weekend, you're going to be a badass. You're going to come back Monday with such a confidence that it's going to be pretty cool. Thanks, Paul. Everybody thinks they know enough to blow it off. I did. Cost me $5,000. 21 trades when I went live. $5,000 almost instantly. Had no idea why I'd lost. Had no idea why I entered trades. Didn't understand momentum or patterns or entries or anything. The only thing I was sure of is that I got my butt kicked. And I had to come to the class just like you guys and get the feedback. Grant had strong triggers. He had a termination that reversed the market, that pivot stop out. He did have a divergence, so we waited for confirmation. And that divergence did push it up right to the top of the window. And he was able to catch it all the way down to support. And guys, this is a medium probability trade. And it's a little outside of the KISS plan because there was the divergence. But all that momentum for the win, right to his target, guys. Absolutely beautiful. And Ron says, I believe in momentum and a clear path so much that when the trouble clears the area and I have odds favorable on my small chart, I'll take an opportunity just to go with all that momentum, to go with that clear path. Taking those advantages that we weren't in class every day. Take care, Adriana. And saying, this is my best of the best. This is why I do what I do. This is my trading plan. And guys, I'm going to tell you, and it kills me to say this because it means that I'm not Superman. When Ron started posting these pictures in the room, they gave me heartburn because he was just jumping in. And Ron started posting these trades in the room, and I was like, oh, he's breaking the rules. And I tried to be the trade rule police a little bit. I really did. I was like, you're killing me, Ron. You're not supposed to just jump in. You're supposed to wait and blah, blah, blah. And Ron's like, dude, he goes, I understand momentum. I understand a clear path. He goes, I just picked a different entry that works for me. And then I thought, well, shoot, if Ron can do it, I can do it. And I tried to trade his plan on a bunch of half truths, whether it was price clearing the area or whether it was where the bars were or whatever. And guys, I got the ever loving crap kicked out of me. And it was very humbling. And then I started studying and I started taking pictures and I started simulating and I started doing all these things and it worked out pretty well. So you guys teach me as much as I teach you. You guys will see things that I'll never see. And if you write on your chart why you did what you did, man, you might be making everybody's world a little bit better. So good stuff. And then here's Cav taking kind of the same thing, right? Momentum down, strong trend. He goes, I have room to get to the target. I'm going to jump in with all this momentum. And then when it breaks and pulls back, once again, a beautiful momentum trade. And Cav, you take it down to the next area. And I just don't know that you could have done either of these any better than you did them. Everything said down, the momentum was strong. You trade to the area and exit. And then you trade from the area to the area. It is everything that we teach every day. I don't know what his plan says, TLC. It doesn't matter what Cav should do. And his trading has nothing to do with mine. I don't take this trade when it looks like that. So I wouldn't have even been in the trade. It's not my trade. But the cool thing is, TLC, is it's Cav's trade. And if you look at 100 pictures of Cav's trades, most of them look like this when he's following his rules. So this is what Cav worked out for him. Man, Ron, have a great, great, great weekend. So, TLC, are you comfortable with the rules, TLC? That when small and large get below an area, the area is broken? We talked about this yesterday. This is a cool one that nobody thinks about. Absolutely. Oh, okay, I got you. Once the small and large get below this divergence, that divergence is rear view mirror. So, cool. All right, you guys have your own conversations. I'm going to go to the next chart because I'm getting confused. Let me see where we're at. All right, that was Cav's trade. Let me scroll down. Next one in. Jas, we got you. Jas says, not my trade, just an observation. Short at 85.47 up here at the pullback. Was that a good entry? 47. So Jas, are you with me in here? I want to talk about this. And the Sunday school answer is if your rules are met, absolutely, it's a great entry. But let's try this, just because I know that you're new, guys, and I love to keep you focused. At 85.47, just initially, I am void of odds favorable momentum. The smalls are on the wrong side. And that's problematic because it's really at 47. And it's hard to pinpoint exactly where it was, but it should have been somewhere right about here. So I don't have odds favorable momentum, and that's not an advantage. But I haven't reached support, so I do have room to get to support. So now I've got to take this outside of the high probability trade. So what I have here, Jas, and at the time of your entry, what I think you probably did have is divergence, which is a loss of momentum. So I have a loss of momentum. I have the smalls that rolled and the large never really went up. And I'm in this really quick momentum phase on the way down. My bars are outside of the triggers. This lets me know that there's some immediate strength, even though the overall isn't there yet. And I'm saying to myself, this is a pretty good look for down. And I come to my smaller chart, and it's showing me change faster, Jess. And it's showing me that the synthetics have rolled. And that the that the large triggers have rolled and that there's no divergence and that there's a pullback right to it. And yeah, that might be a shot to get down. A little higher probability shot is when the small triggers break and it pulls back rather than trading into it. So it's not a high probability trade. So you have to ask yourself, are you at a point yet where you can start pulling all of these factors in order to take this trade? Are you at that point yet? But you know what? I think I just saw something, Jess. Let me see your timestamps. See, I can't see your timestamps. But looking at this is over here, not over here. Does that make sense? So everything that I just said is absolute garbage because I was trying to be a little more current. Here you have odds favorable momentum and a clear path, and it pulled right back to the mid band right at the large triggers. Hell yeah, that's a great trade. And then you could have gotten paid here, or with all that momentum, you could have held, waited for divergence, something like that. Sorry. This is why lining things up makes it a little easier for me. Because see how this chart stops here? That's like right there. So I had to work my way through all of this to get back to that. But yeah, absolutely, Jazz. That was a beautiful entry. Because you had strong triggers and a clear path and room to your target. And that mid-band's just below the large triggers. Love it. Love it, love it, love it. My apologies for not reading that correctly the first time. Some days, my brain isn't as sharp as it would like to be. Let's see who's next. GWC. Bad top, termination, full reversal, the beginning of odds favorable, beautiful pullback, money, money. GWC, I love everything about this trade. Thanks. You like that, Paul? And guys, I'll do that sometimes. Sometimes I'll look in the wrong spot on your charts and you'll be thinking, dude, Mark, what the heck are you talking about? So guys, this is a pattern expectation thing, and GWC's been around a while and he understands these expectations. I want to share what he's thinking because his annotation is plenty for him. And he knows exactly what he's talking about, and he knows why this termination condition is so important. But everything for this trade begins at this pivot that's not from an area. And guys, do you remember the termination? This is a bad top. It's not a decision-making point. It's not an area where buyers and sellers were expected to really change their course or make big decisions. It's just a bad top. And when I have a bad top, the mid-band is my first target. And look at how it's such a termination condition. So GWC understands through pattern recognition. GWC understands through the time that he spent in the market that when this bad top creates a perfect termination condition, quite often the market absolutely loves to continue in the path of the overall trend. This isn't necessarily a high probability trend trade. But because of that expectation, right here his smalls begin to get above the large, but it's not a clear path. But all of his triggers are rolling. And GWC says, because of the expectation of the pattern, getting in at support right here at the triggers creates an opportunity for me to ride that. So when a bad top pushes to the mid-band, there is the potential that the market will continue up. When it reaches these triggers over here, that's the decision-making point. And GWC recognized that they went past the point, that the momentum was heading up, that the triggers were rolling, and he was able to capitalize. And it's not a high probability trade. But when you're a chart reader, when you begin to recognize these, it starts to make sense. And I'm going to tell you, when I first started, I was going short right there and getting mad when I got run over. And I was going short here and getting mad when I got run over. And I was even going short here And GWC was just sitting and waiting. No, he took it right here. Don't be the trade police, TLC. This entry is right here. I know. But this isn't your trade, TLC. This is GWC spending the last year learning patterns, not trying to come to terms with being a chart reader. But this is me telling you that eventually, when chart reading becomes second nature, when you've got those repetitions, you'll start to see more opportunities. And that's why he's able to take this trade and feel comfortable and confident based on the expectations. And this is odds favorable to the downside, right? And it's one of those things, TLC, where, and I say this, I think, because I did this a lot as a brand new user. I tried to understand everybody's trades. I tried to understand why TLC, or GWC TLC, did what he did. And I tried to understand why Cab did what he did. And I tried to understand why Ron did what he did. And I tried to understand why JW did what he did. And I tried to understand why everybody did what they did. And I spent so much time trying to figure out what the hell everyone else was doing that I forgot to learn how to read charts. I forgot to just create this solid plan of rules that were going to bring me success. And I'm not saying that this is what you're doing, and I'm not trying to put words in your mouth, and I would never insinuate that you may stray from the course, but I'm telling you from my own experience as somebody that had to learn to read these indicators from ground zero, is the more time I focused and tried to understand what wasn't my trade, the harder it was for me to find my trade. So until I was making money consistently, until I knew exactly what I was looking for, until I had my trade down like the back of my hand, I put blinders on. And I stopped trying to figure out what the hell my brother was doing. And I stopped trying to figure out what anybody was doing, because all it was doing was distracting me from the advantages that I needed to be successful. And I know that probably sounds a little preachy, and I apologize if it does, but man, this is me trying to help you guys avoid some pitfalls. All right, Dave, I couldn't figure out your trade just by reading it, so I'm glad to take the picture now. So let me see. Odds favorable momentum with divergence. Aware could become a divergence PSO, second lower fib. So couple different things. First trade is into the fibs in the midband, and you're one tick off, Dave. And I like to share this when I see people take these trades that are one tick off. And maybe you know this. I know that you've been around for a while. But this is pretty cool for new users, I think, is how do the fibs come to be? So when you open your software, your software runs thousands of calculations. It measures every swing in the market, every up, every down. It does it historically. It creates synthetic time frames. It does all these different things. It projects forward, and it gets thousands of these lines, all of these Fibonacci retracements and alternates and all those things. And then the algorithm comes in, that little thing that made me surprised how smart my brother was. And it asks which lines are the most important, where are the highest concentrations. And guys, people used to do this by hand back in the day. And it would take 5 or 6 hours before the market opened. And now it happens in seconds. But these concentrations are from thousands and thousands of calculations. So when you get one tick away from a fib, these are very much areas. Fibonacci areas are very much areas. And if I have 1 or 2 ticks above or below, I consider it to be hit. And then, Dave, you had a great look, right? It was a pretty good look with the momentum. But the one thing that happened here is you had the gap theory in play. Your large triggers were still dragging behind. They were a full bar away. And you were one tick off. And this is where I kind of go for the tiebreaker. That divergence keeps me out. And this trade, I think, is an avoidable trade because of the gap theory. Does that make sense? That gap back to the large triggers, are you comfortable? Are you familiar with the gap theory? For me, I think it keeps me out of this momentum style trade because there's just nowhere to go. Awesome. And then when it comes back and it closes that gap, you recognize that nothing has changed. And that's where you get in and you get out of trouble. And then eventually you trade right back into that resistance. But at this point, you're coming off of that support. The momentum is absolutely the best. There's no divergence. And you're like, man, it already tested both ways and everything still says up. And you were able to capitalize. And it's beautiful, beautiful chart reads. And let's see. And it lines up with the HVA, which is nice. White, is that white paint bar down into HVA? Termination on 13.2 with divergence, 5-1 rules met for best trades. First, second, right on. I like it. David, it's great trading. I think the only one that I might try to eliminate from the mix is that one that fights the gap theory. Is that one where the large triggers don't follow and you're so close to the area that I think we can play horseshoes and hand grenades on it. And maybe if there was no divergence, you take that shot, right? You take it right from the area, though. Short trade and large triggers roll, yes. Gap one always gets me. Yeah, and man, it got me forever. It really did. And you get this really cool ability to piece it all together about 1,000 times faster, Dave. I still get caught on the gap theory every now and then. I'm not going to lie. I get so focused on the long that I forget to figure out the things that may be hurting me. And that's part of it. And I don't know when you outgrow that. I haven't yet. I still make mistakes on the gap theory every now and then. I still trade against that gap from time to time. And it never serves me well. Great trading, though, man. Great chart reading. And then, David, you gave us that awesome lesson on the 3 divergences. Thank you for that. And then Haji says, was looking at this chart live as it came up from the pivot to the large triggers. The mid-band was a termination condition the first time. Absolutely great recognition, Haji. The second time it was not, and you're absolutely right. The second entry was awesome, Haji. The first one, trading into the term, it corrects. The second one is just perfect. It's a great read, but it goes back to that idea that when we're new and we're still figuring this stuff out, guys, it feels like there's a lot to process. And the rear view mirror kept you from focusing on what was happening in the moment because you had just seen it fail and you thought, oh, failure. And you didn't piece together whether rules were met, rules not met. And Haji, it's a great read. Everything that you put on that chart is beautiful, beautiful chart reading. You did a great job with it. And by annotating it, you're going to catch it next time, right? So Jas. All right. You will. I don't have doubts about any of you guys. I don't leave class and go to my wife and go, you know what? I tell him he's cool, but Haji is freaking doomed. I don't. There's no doubt in my mind. Guys, if I can pull this off, anybody can pull this off. I am the daydreamiest, math deficient guy that you will ever meet. I am the epitome of the daydreamer artist. And it took me a while to learn this the way I needed to learn it. And I had to figure out what worked for me, what didn't work for me. But eventually it clicks if you stick to it. All right, so Jas, our goal, my friend, is to never have to say, is this a good entry? But rather to change that verbiage to, are my rules met? So when I do that, the first thing I look for is, do I have odds favorable momentum? Well, what do you think, Jazz? There's a couple looks. There is the best of the best. There's the beginning of a slowdown, and then when they get inside, it's anything can happen. So when I look at this one, I can say it's slowing, but still momentum. Is that fair? It is slowing, but there's still momentum. It's not completely buried inside, so I dig it. And then my next question is, do I have a clear path? Has price reached an area and the trigger's not break? And this goes back to, if you just heard the lesson, so we're one tick off, right? We're one tick off. And I'm saying to myself, man, it's going up, it's good, it's one tick, I like it. Let me make sure that I have a great entry area. Let me make sure that I have an area inside of favorable large triggers, because what I do is I go back to this bad boy. If I'm going to have a clear path and I still have momentum, even if it's not great, let me make sure that I don't give up that entry area. Let me make sure that the entry area is solid. If I'm going to say the path is clear, but the momentum isn't great, let me make sure that rule number 3 is met, that pullback to support inside of favorable. And honestly, it's just not there. And the momentum isn't great, so I don't trust these lines as much, because it might go all the way to 52.11. So I think that on this one, I've given up 2/3 of my advantages. So for the brand new user, maybe not so much. For the experienced chart reader, you might wait for a little confirmation. You might take a chance to retest, but you're going to be watching it and managing it super aggressive. And most new users can't piece it together fast enough to be as aggressive on management as this one would take, because it looks like it didn't quite make it. And I'm not sure. That's the ES. And I don't know if it made it or not, but it has that look for the deeper retracement. So it's a great, everything is green. You're looking for longs. That's a huge success. And then what happens is eventually you'll just start pinning it back to, are my rules met or my rules not met? Do I have that advantage? Do I not? And it didn't make it, did it? You give away 2/3 of the, and I'm glad that you saw that. Because without the momentum, with all of my areas on the wrong side of the correction point, there's enough missing from that one to keep me out of the trade, Jess. And as a brand new user, if that kept you out of the trade because the rules weren't met, that's a loser that you avoided by following a plan that's been proven to give success. So I love pictures like this, and I love that you took the time to analyze to see what happened after. So good stuff. And then somebody, I don't know who did it, ugliest consolidation. Amen. And that was right before news. Andy, was this you? Who was this that posted this? That was Andy. Do you guys remember that we had 10 a.m. news and you guys said, holy crap, gold went crazy? Do you guys remember that? This is them winding up. These are guys jockeying for position right before news. This is them trying to figure out where their best spot to be when news releases happen, and then it shot down. 3 divergences above, 3 divergences below, support held, resistance held. Gosh, what a great area not to get caught in. Nice job, Andy. That's a great read. These reads are important for you guys to take pictures of every now and then, because it just reinforces and establishes trust. Strong triggers, red background, 50-50, no divergence, perfect entry, divergence prints, get the hell out. GWC, perfect. And this goes back to GWC's expectation that when a bad top hits the mid-band in the areas, he knows that he has to be cautious. And I love that you were able to capitalize on that. Nicely done. And then, Paul, that's the same one, 50-50, no divergence, take an entry, divergence prints, get out. Perfect adherence. Nicely done. Ron says, all the momentum, haven't made it, get in. And he actually got out a little later than the area. But momentum and a clear path. Price hadn't reached. Good stuff. Cav. Termination. Reversal. Price pivots, both triggers above blue. And then Cav, this is trading into the area instead of trading from the area. You got to watch those one-to-ones, man. When the small triggers don't get through, that bounce is possible. And your correction points are below you. Does that make sense, Cav? If price is going to return to triggers, those triggers are below you. Maybe just a little bit of patience on this one. And that's just, it's a wonky spot. It's a great look on the large chart. And it was a little difficult here. And sometimes you get that little fight right at the triggers. But just because none of them are above the area yet, that's an interesting look. I don't hate your entry. It did go back. You knew where it was likely to go, and it made you sweat. Those are tough, but you're in the momentum phase from a termination, and it's beautiful. Whew. These are so hard to hit through or to sit through, and you did a great job of it. That's not an easy trade. Not an easy trade, but it's a great read that got you into it, and it was confidence in your patterns and in your chart, your large chart, that kept you in it. So nicely done. Oh man, it's such a great termination. Reverse the market, and then this is the one, just don't ever miss it, right? That's the easiest trade you'll ever take, Kev. Guys, if you are building a trading plan, I would go ahead and put this one in the favorite looks. That's a termination, full reversal, odds favorable, perfect entry, right at areas inside of triggers that are stacked one on top of the other. No divergence. I mean, I could go on for days. Cav, you get the microphone on Monday. You're going to teach everybody how to take this trade. Couldn't have been any better. All right, Maram, first chart. All right, Maram, are you with me in here? I hate to do it, but you got to get the new guy lecture just a little bit. One of the biggest things that you've got to do, my friend, is you've got to show me both charts. For me to give you any sort of feedback, I need to see both charts. And not just both charts. I really, really do better if you show me not only the price, but also the timestamps on both charts. Because when I look at your chart, I don't know. Well, I know you're trading the S&P because I recognize the price structure. But I don't know what your large chart was doing. I don't know if you had momentum. I don't know if it was a clear path. I do know that you didn't take an entry inside of favorable large triggers, and you could have avoided all of this nonsense and taken this beautiful one right here at almost the exact same price and gotten the same results. So what I can discern from your chart is that this doesn't follow the rules for entry as we teach them for the high probability trend trade. But this one looks like something that I would hate to do without. And sometimes it's that little bit of patience that keeps you from getting caught in that dance and that fight and makes it effortless off to the profit area. Does that make sense? Was this today on the NASDAQ? This is it right here. Around 9:30 this morning. We had already circled it, didn't we? So your large chart was beautiful. And we had some great discussions about this one. There's that pullback to the large triggers, says wait. So instead of getting caught in the dance, once everything comes together, it becomes pretty effortless. So Merrim, awesome large chart read. Great large chart read. Everything says up, the momentum is there, life is good, everyone's happy. And then just that little bit of patience for everything to come together will keep you from having gray hairs like I have. Nice job, man. And welcome to the room. Thank you for posting. It's hard to post in the room, guys. It's scary to post in the room. You crushed it. Cav, everything says up. Everything agrees. That is a late entry. That is such a late entry. You say you took the pullback into the triggers, Cav? Can I mess with you here just for the fun of it? This was the pullback into the triggers. This was the oh shit, it's going without me. This was the pullback into triggers. This was the son of a gun. I missed the pullback into the triggers. I better jump in because everything says it's going up anyway. And guys, when you get good at your chart reads, you can pull off stuff like this because Cav still knew where his stop went. But it wasn't the pullback to the triggers that he took. It was the son of a gun, it's going without me. He was in at the high tick of that bar. And then just to mess with him, the market said, let's push it to the mid band. Cav's too good at this. Let's see if we can humble him and scare him out of the trade. To which Cav replied, to hell with you guys. I know where my stop goes. I paid attention in class. I love this because this shows confidence in this. This entry and hold shows that he believes that large chart. Awesome, Andy. Isn't that cool? Yesterday you struggled, today you're rocking. One day is all it took. Nice job. So guys, when you feel frustrated, when you feel like you're not pulling it off, remember you're one aha moment away from having it figured out. Whoa, Muser. Are you in here, Muser? I have to ask you, does that chart look right to you? Does that look like where everything should be? And it might. Look at where your small triggers are. This is where there's like a funky little click going on. No, it's okay. This isn't, guys, this is nothing more than being comfortable with your tools. Under no normal circumstances should your triggers look like this. There's a glitch in the matrix, Muser. If this ever happens and you're like, that doesn't look right, because it should look smooth, right? Your small chart should look smooth, and your small triggers never get that far away from the large triggers, and they should have this normal kind of healthy look to them. And this is so wonky and out of sorts, and you won't recognize it until you have some repetition. But if you ever see it like this, guys, and sometimes this happens to me on a Monday, I don't know why, it's like new stuff, just right click and reload your historical data, and it'll help you out a lot, Muser. It'll get you to where it kind of makes sense. But if you look at what you had, triggers rolled, you had strength, you had a clear path, and what happens here is, do you see how far away the large triggers are? Price still likes to close the gap to those triggers, and getting caught in between the large and the synthetic. Do you remember the correction point talk that we had? That we expect price to correct to the triggers. Red is just the wrong color. And when they're split, we're just not sure where it's going to happen, which is why when they're one on top of the other, it's easier to find your entries. So what happens on something like this, even without hitting the area, it's either going to go from the midband that happens to be inside, or it's going to pull all the way up to the synthetics, and you never know what it's going to be. But when you jump in between the two, that's almost guaranteed that you're going to get run over on the way to the synthetics. Your large chart looked good. And this is one of those ones where sometimes I almost have to take two entries. If you take the first one at the midband and it doesn't work, you've got your stop above the reversal bar. Maybe you lose 2 or 3 ticks. And then when it comes up to those synthetics, you look for another opportunity. And it does everything that the large chart said it was going to do. But those split triggers create enough indecision that I can't really pinpoint with enough accuracy to make me feel good about the risk. Does that make sense? Does your chart still look like this? Right-click and reload that historical data. It'll make it easier for you to read for sure. And that's the ES, right? Oh, that was yesterday. So I could pull mine up real quick and see what it should look like. But yeah, refresh that data. It'll help. Cindy, you put the scissors icon on there. I love that. Termination, reversal, momentum, not quite broken, but because there's no divergence, strong triggers from a good bottom, the momentum is growing. You take the perfect entry, and then one divergence doesn't scare you. If anything else, you could have added on. And then that next one comes in and you get stopped at support inside of favorable large triggers. So you protected your stop loss, and then this is one of those times, Cindy, where maybe I put my stop loss a couple ticks behind it, or I just exit with the divergence, and I'll re-enter if it's good. It's a great looking trade. And here's something to think about. You may or may not like this, I don't know. So what if I take the perfect entry, and then when divergence points from the 1-to-1, I exit. And then, or I take half off at the 1-to-1, and I add it back on the trend trade, and then I take the other half off at the divergence high, and if my rules are met, I add it back on with another trend trade. Just get paid, right? Get paid. You're good at this. And one of the things when you get into management is you'll see this a lot. And I'm going to show it to you guys on that little PowerPoint that I use in the morning. It goes into management a little bit. So let me show you, and we'll do this real quick. There we go. And this is kind of what yours look like. Sorry. You're in the long trade, and one of the things John Novak teaches is take half off at that yellow 1-to-1, and if divergence is true from the yellow one, it's okay to exit. And you can enter again if you get a signal, but this is a great way to conserve a little bit of equity. And the same thing is true when you get to these divergence highs. It's all right. Get paid at them, right? They're a problem if you're in that trade, and then just re-enter if that divergence pushes down. And you can do that. I've seen people do that for like where you end up making money from here to here, and then you end up making money from here to here, and then you end up making money from here to here, and you literally can double dip and go through and do amazing things with there. And if I remember correctly, because I have trouble forgetting things, I had a picture of Debbie doing exactly that once, where she exited half a contract, put it back on, exited half a contract, put it back on. And I don't know where that went. But it was beautiful. And when you get really comfortable with what you're doing, you're going to be able to do that. But great trade, Cindy. Just remember, the goal is to get paid, right? The goal is always to get paid. You're welcome. Nice job. All right, TLC. Good bottom, no visible entry in the big triggers. You know it will pull back to the lower, bigger trigger because of odds favorable. You knew it was going to do it. That's amazing. I've never known anything that the market was going to do, but you knew. Good job. Put the first top profit target at the mid band. Second above the yellow 1-to-1s. I'm trying to see on the large chart. So the first one, I dig it. I really do, because you get that bounce. The gap theory closes TLC. Both of your triggers are rolled, and you get in at support right by the triggers, right at support likely to hold, with the smalls above the large, everything rolling. You pinpointed like an absolute rock star where that market was most likely to continue after that termination. I'm not sure you could have done that any better. And then we get into the 1-to-1s. In TLC, this goes back to the lesson that John teaches. Divergence off the 1-to-1s, wait for a signal. Divergence off the 1-to-1s, wait for a signal. Divergence off of the 1-to-1s can create a pretty good ugly push that'll take you out of a trade. And that's it. I think you did this absolutely perfect. I think that your second entry is a hold on, let's wait and see entry. Does that make sense? Yeah, and I saw that you were able to get out of that and jump ship, which is solid. Good stuff. Did you close it because you were scared? Did you close it because you realized it wasn't right? Did you close it just for the fun of it? Because I see one target hit and then a stop. And sometimes we realize that we may not be in the best trade, guys, and an exit is always the best option. But you don't know that. TLC, you don't have any idea what the next bar is going to be. Right? So fortune telling is a rough plan. Let me see something real quick. Termination. Let me do this. Will the termination break? Signs point to yes. So I should go long, right? Because now I know that the termination will break because the magic 8 ball said. and that's what happens, guys. The second you assume that you know what the market's going to do, the market is going to humble you a lot. Now, you can create expectations based on patterns, and my expectation based on this pattern is that the market may reverse, there may be an untradeable bounce, that the market may end up in just a fight at this key area. So while momentum says up and the trend says up and a good bottom suggests more up, I don't have a huge advantage because I'm directly into a termination condition. But if because of the good bottom, because of the momentum, because of the area inside of favorable large triggers, I choose to take this trade anyway, my stop goes where the market shouldn't. Because it's an aggressive trade, I'm going to do my best to get paid on it, hoping this momentum carries me up. And the reality is I'm probably not going to try to hold beyond the area. Does that make sense? My chart reading says if you're going to take a shot, take it from the best spot. Don't risk a lot of money. Get paid quickly. Recognize the trouble because you're trading without the advantage of a clear path. But you are trading with momentum and an entry area, And you just kind of have to make the decision, are you willing to take that risk? Does that make sense, TLC? I don't know if it's going to be green or red. I don't know if it's going to break or hold. I don't know anything other than I can clearly see momentum and I can see an entry area, and my chart reading says that I don't have a clear path. So if this trade runs my ass over, I'm not allowed to be surprised. I'm not allowed to be upset or dejected. Um, I know what I got into. I know why I got into it. I know what my advantages are, and I know what my disadvantages are. And guys, you may have a plan that says take this. I don't. This is something that I believe in termination conditions wholeheartedly. That's just me. And then that's the most basic form. It says no trade. Does that make sense? I do too, Cindy. I lose into them more than I win, which means that there isn't a statistical advantage, which means that I'm relying on hope. And guys, there's times where you can trade into a termination condition and have a better chance. This is one of those times. No divergence, strong triggers everywhere. If I were the kind of person that was willing to trade into a termination condition, this is pretty much what it would have to look like. But because I know that my clear path is gone, I simply choose not to, right? Paul, this goes back to that idea. What's the exception, Mark? What's the exception? Well, I can't have exceptions because exceptions create opinions, and that's all it is. It's a fancy word for opinions. So I can either be, hold fast, this is my recipe, otherwise I don't trade, or eventually I create a plan that says, from a good bottom with a higher divergence, with odds favorable momentum, with no divergence, with a very concise entry area, smalls outside of the large, maybe I'll take a shot to retest the area with all that momentum. And guys, even though I knew that this is the best way to take this medium probability trade, it still doesn't fit my plan and I chose not to take it. And no matter what happens next, I have to be okay with that. If it runs up for 1,000 points, I have to be okay with that. It's just not my money. And we'll see what happens here. Guys, I need to take 2 minutes. When I come back, we will finish strong. Sit tight. What time is our movie? I gotta take a break. Thanks. Man, I guess I should have believed the magic 8 ball, huh? It was right. All right, Muser. Triggers were starting to weaken. Nope, they had full-blown weakened. 100% weak, 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 weak. Anything can happen. No areas inside of favorable large triggers. So rules 1 and 3 not met. And this is one of my favorites. One of my favorites, guys. When you show me your butt. That's what we call it, showing your butt. When you say my rules aren't met, but, right? It's not momentum, but it's not an area, but. And I love that you said not a rules-based trade. Not inside of favorable large triggers. So without the only thing that I don't agree with is they hadn't started to weaken. They were already weak. So you give away 2/3 of the advantages, and I'll be damned, it doesn't work. Once again, so the goal is M user, and correct me if I'm wrong on this, because guys, I'm wrong probably more than you guys let me know. You wanted a short, but you couldn't get it, and then it starts going up, and there wasn't a long, and you thought, oh man, I get a long, and you didn't get a pullback, and you overthought this one, and then it goes up, and you can't find an entry, and it keeps going, and even though it's weakening, right about here, you're like, these jackasses didn't give me an entry. And all that money isn't in my account, and nothing is great because dag nabbit, I'm going to go long and see if I can recover some of the money that they owe me. I've done it. When that momentum goes away, guys, especially when you get that divergence on the smaller chart, the momentum goes away. And again, the triggers are kind of janky here. I hope you fix that. More thought than you gave it. Well, I think most of it is subconscious, Muser. The fear of missing out is very real. And then the fear of having missed out, or the recognition, even subconsciously, that you feel like it went without you, right? If the biggest asshole in the office throws a party and you're not invited, you still feel like you missed the party. And there's that little part of you that's like, well, how come I didn't get to go to the party? And you ignore the logical side that says, but we don't like them anyway. You just know that there's something going on that you weren't a part of. And you get that little bit of, oh, I feel like I missed out. And this is one of the things that I see, and this is where I think mistakes happen the most, whether you know it or not, is if the market moves a lot in one direction, we feel like we missed out. If that trade that didn't follow our rules wins, we feel like we miss out. And then maybe we're more apt to break our rules next time. And that tends to be a pretty solid pattern with people. And it doesn't have to be your truth, but it has been the truth for a lot of people. So we go back to the whole idea is that you have to know what you're looking for, guys. And this is something that my brother wrote up for the website probably forever ago. But learning to trade at a high level, it goes beyond just making money, and it involves an understanding which next-gen indicator patterns can be executed confidently. And that comes through trading, both winning and losing trades, and embracing the learning process and not fearing losses as long as you're sharing those outcomes and getting that feedback. And using the simulator. And what we do is we give you everything that you need to avoid the pitfalls, the technical patterns, and all that sort of stuff. And what it does, guys, is it becomes nothing more than rules met or rules not met. And you stop worrying about the results. But more importantly, what you worry about is the execution of the method. Because the execution of the method provides you a statistical advantage. The execution of the method is trading a pattern that proves to win more than it loses. And the execution of the method means that you understand completely that every trade can't be a winner, that every trade can't be a home run. So you focus on adherence to those rules 100%. not letting yourself get a little sidetracked because it's simulator, not letting yourself break out of that mold because of what you just missed, but rather being consistent 100%. And those are just some of the things that go into the psychology of trading. And the psychology of trading is going to prove to be more challenging for a lot of you than the actual pattern recognition. So this is a book that I've read 3 times. The Psychology or Emotion-Free Trading, guys. It's right there in a PDF. And emotion-free trading talks about that execution of method, and it talks about adhering to a plan, and it talks about the pitfalls of going outside of that. And there's just a lot of really cool catchphrases in it. So if you need some weekend homework, read that emotion-free trading book. It's an outstanding book, and it'll only take you an hour or two to read probably. And then there's another one right here. This is the 7 Habits of Highly Successful Traders. My brother told me you need to read this every day for 30 days, and it'll change your life. And he was right. It did. And it's an outstanding read. And it's so pertinent to what we do. And know that everything that we're doing is a journey, guys. We're starting at the beginning and we're trying to get the end. And there's going to be signs that you're maturing as a trader. And the first one is that you manage risk before you manage reward. Nexgen helps you with this because we keep you focused in the beginning on having the advantage of momentum and having a clear path and getting in where the market is most likely to continue. And each of those individual elements are designed to help you manage risk because when the advantages are in place, the trade is more likely to win. And then you enter and then you focus on the reward because you've managed your risk on the entry. You being relaxed when making trades is a definite sign that you're maturing as a trader. And if you guys remember when we talked in the very beginning, asking yourself, what feels easy? What keeps you relaxed? That's understanding in your brain, consciously or subconsciously, that you do have a statistical advantage. You don't force or chase trades. You don't try to make something happen. You are a seagull bobbing in the water rather than fighting each individual wave. This isn't your daily adrenaline fix. You guys that are trading the NASDAQ because you think it's fun, because it's exciting, because it moves so fast, and you keep losing, but you feel like that's where you need to be. Do you need the NASDAQ to reach your goals, right? If you're not comfortable with chart reading, do you need to put that pressure on yourself? And I think this is one of the biggest ones and probably one of the hardest ones to do is following your trading plan, guys. Are you so convinced that your trading plan works that it's hard to deviate? Are you so comfortable with the advantages that it provides? Do you find yourself nervous when you go against it? Most of us break our rules at least a couple times a week. How quickly do you get back to your rules? Following the trading plan, guys, it's a huge sign of maturity. And then my favorite one, because I'm a hippie, is your worth as a trader and your worth as a person are 2 totally separate things, guys. Your value as a human has nothing to do with your ability to trade. Traders beat themselves up all the time. Traders love to beat themselves up. They love to, I suck, this is no good, I'm no good, blah, blah, blah. And the reality is, guys, is you have to give yourself a little bit of grace. You're learning something brand new. You're learning $1 million a year job. Plumbers do a 3-year apprenticeship, right? Engineers take 4 to 5 years to get to where they need to be. Doctors take 7. You can outperform each and every one of these people with a very solid plan. So give yourself a little time to get good at it, but celebrate the victories, guys. Celebrate the victories. And know your plan so well that when the trend is weakening and the areas aren't inside of favorable large triggers, that you don't feel compelled to just jump in at a green line on a screen, right? That doesn't provide you a statistical advantage. What else as we go into the end of the week here? You guys should be watching the Masters right now. I do a lot of typing. Things you have to know before you ever sit down. What's it going to take to get you in? What are the conditions to get you out? What's your daily goal? What's your stop loss? And then John Novak says that Kepka is +1. He's going for the birdie. He's going to miss it and blame DeChambeau. So it's cool. Did Scheffler? He probably hasn't teed off yet. So guys, we're going to do this every day. We're going to talk about this every day. We're going to give ourselves all these advantages every day. The easiest thing for you guys to do is ask a lot of questions. And John, you finished early. Call it an early weekend. You guys were only up $4,000. Is that a 4 lot, John? You guys trade 4 contracts over in your room? Is there anyone in this room that is consistently making $3,800 a day? If you're not, you should be paying attention. That's a pretty good day. That was after you were up 68. But was it a 4 lot? Is that what you're trading typically? Guys, my brother sent me a picture and for those of you that don't know, John and I are brothers. He's not my dad. He looks like my dad. He's old. And that's a 4 lot. But this picture right here, just for reference, this was at 8:45 this morning, guys. This was my brother saying, okay, I'm going to go to simulator now because I've already reached my goals at 8:45 Eastern in the morning. And I'm going to go teach my class and have a good time. And that's the goal, guys. The goal is to get paid, to win, to have advantages, to take the correct trades so that you can go swing golf clubs, so that you can go do whatever you do. Man, he will, Bob. We've been picking on each other for 50 plus years. I didn't realize he was this smart. I didn't realize just how smart he was. But you know what I did realize is that his ability to show you guys where to call tops and bottoms, his ability to create rules that give everybody an advantage is unfreaking believable. It is amazing. And it's even more amazing that he shares. He doesn't hold back, guys. We don't hold back. You get everything that you need to be successful. You just have to be willing to do the work to get it. That's all it is. I was the same way. I had to be willing to do the work to get it. And I wasn't in the beginning. And it cost me a lot of money. So what do you guys want to talk about? I'm done flapping my gums. So we got 2 choices. You guys can ask some pretty cool questions, or I can go to the driving range. Guinness beer and Masters. Yeah, I still say you're full of beans. Guinness beer is not gluten-free. TLC. Odds favorable, clear path, no divergence, pull back to support inside of favorable large triggers, quick profits, and then holding for the duration. TLC, Rockstar. How'd it feel? With all that momentum, with the clear path, with the pullback to support, you didn't have the fib like I did. That's easy, isn't it? Guys, I love seeing this. Because when you take trades like that, who cares what everyone else is doing? Outstanding trade. Beautiful trade, TLC. Great chart read. Awesome entry. Stop placement made sense. And your target makes sense 100%. That's it. All you have to do is be able to do that a couple times a day and you'll never work another day in your life. And that's not a bad deal. CME will get you Muser. But here, ES is $12.50 a tick. And then it is $50 a point. I'm typing it in the room. CL is $10 a tick and $100 a point. NASDAQ is $5 a tick And I want to say it's 20 bucks a point, 4 ticks and a point. So they're all different. But the CME website, futures, contracts, tick values. Stock index futures, ticks values. So if you come through here, it's pretty cool. Everything you need. Let me give you that link. Google's amazing, guys. I can find anything I need at the drop of a hat. All right. What do you guys want to talk about? You're welcome. Termination, weak triggers at a fib, divergence, mid-band in the middle of nowhere. Thank goodness we didn't go short. Termination, gap back to the triggers. Thank goodness we didn't go long. Does anyone else have rules that kept them out of this nonsense? Or more importantly, did anybody take either of those trades? And do you want to talk about why they may have been riddled with problems? Cab, take care. Great trading this week, man. TLC, the ATM, stops and targets. Nexgen has given you every possible scenario. So when you click custom, it allows you to create your own if you don't want to use one of Nexgen's. So you decide how many contracts you want to trade, right? Whether it's 20 or whether it's 4. You decide how many different strategies you want per order. If I'm just going to take 4 contracts off, right? And my stop loss is 12 ticks, and I'm just going to take them all off at 21 ticks, then I'm done. What do you mean, what is stop strategy? Stop loss is where your protective stop goes initially. But this number is not your number. This number gives you time to react to put the stop where the market shouldn't go. I don't know. I've never used it. I have absolutely no idea. You would have to go to NinjaTrader for that one. I've never used it, TLC. They're downloaded, Haji. You got every one of them when you downloaded software. Every one of them is right here. And if you don't have them anymore for some reason, go to the page, go to resources, and download the indicators, and it'll give you every workspace, and it will give you every ATM strategy, and it'll rebuild everything and give it to you fresh. So TLC, you can make a custom one if you want. Nope, don't know anything about it. Don't know, and I'm sorry, I just don't. I don't use trailing stops. Everything that I do is manual. Everything I do is based on what my rules say, where my stops go, where my targets are. Everything that I do is based on reading my indicators, because a trailing stop may not make sense in some cases, and it may make sense in other cases. So yeah, I try to be in control of everything. And then my goal is to be such a great chart reader that becomes effortless over time, and it will. It really will. And Muser, absolutely. That would have been a 50-50. And man, is this today or is that yesterday? In Muser, where are you at in the world that it's 1402? Okay, it is yesterday. Whew, I'm like, man, you're somewhere way off in the Atlantic Ocean. Did you refresh? Did you fix that yet? Okay, and it worked. It got you back where you need to be. Cool. But yeah, perfect read, man. 50-50. TLC, I know that probably wasn't as helpful as you needed it to be. Um, but Ninja Trader has freaking everything that you could ever hope for. And once you start getting out of basics, there's your link to it. And you guys know I hate to admit this, but I don't mind telling you, I'm so not techie. And if it weren't for my brother being brilliant, I wouldn't even be in this arena. And if it weren't for someone else writing these indicators, I would never have them. And everything that I present to you guys, I came from ground zero. I was a restaurant manager for 10 years. I had 2 spine fusions that took me out of the game. I draw on people for a living. I'm not a programmer. I don't have a history in the markets. I don't understand what even creates a midband. I was trying to build a workspace yesterday, and my brother's like, just do this. And I screwed it up 73 times until he finally stepped in and got it right in 2 seconds. Guys, I am everything that should not be a day trader. But because all I did was focus on patterns, I've done pretty well. And you can do the same thing, whether you're an engineer. We've got truck drivers that have done it. None of us would be in this arena. Well, you might, but you may not be as successful. Man, I met this one guy. He's just a pool shooting bartender, and he trades like a bat out of hell. And it's cool, right? Because it doesn't matter. All you got to do is learn the patterns, and once you learn the patterns, stuff gets pretty easy. But give yourself a little time to learn them, right? So you overachievers that want to be good yesterday at something that takes some time, give yourself a little time. I promise, I'm not going anywhere. I'm with you. Yeah, I know TLC. Me too, man. But here's the best, and this isn't trading advice. This is just life. This is education advice. Stay focused on what's important. Stay focused on what's going to bring you success. Stay focused on your trade. There are a billion opportunities out there, but learn the basics. Create the foundation before you chase them all. And what you'll find is that you won't even have to look for them. Different patterns will set themselves up. Different things will repeat themselves, and they'll magically work their way into your plan over time because you keep seeing them. You can't ignore them. And that's one of the cool things about what we do is I bore you guys to death with saying the same thing every hour, the first hour. But what happens is some of you, it clicks on day